Good morning, traders. Welcome to the Traders Corner Prop Trader special event, How to Pass, Profit, and Prosper. I'm your host, Anthony Chapman, and I'm thrilled to have you with us for what promises to be an incredible day of high-level training and tactical insights. Whether you're preparing for your first prop firm evaluation, scaling across multiple accounts, or simply trying to extract more from your trading, today's event is designed to give you the practical tools, proven strategies, and cutting-edge tech to help you move forward. Prop trading offers a game-changing path to modern traders. Your trade with firm capital, not your own. Your access, leverage, and scale not typically available through retail, and you're rewarded purely on performance with weekly payouts, scaling plans, and tools to amplify your edge. Today, you'll hear from 7 experts, presenters, each focused on one key area of that journey, from psychology and discipline to automation and payout optimization. Before we get started, I've got some exciting news. During today's event, PropShop Trader and Right Line Funding will be giving away 2 free prop accounts each. All you need to do is click the drawing link I'm placing in the chat room now. So I'll do that for you right now. And this will be up again throughout the day. Apologies, guys, it's not copying for me. So I'm gonna put this link up, posting it now. Sorry, guys. It does not want to copy. All right, so this link, just if you fill that out, it's just like a Survey Monkey thing, and it's a chance to get a prop account. All right. Also, let me make Price the presenter for you guys too.
You see that okay, Anthony?
Yes, we can see that.
You want me to roll? You need to do anything before we roll?
Look, can I do your introduction?
Yeah,
I
that's great.
apologize.
No, you're
Yeah.
fine.
So let's kick things off with a true industry leader. Price Headley is the founder of BigTrends.com and a member of the Traders Hall of Fame. He's a CFA and CMT who has appeared on CNBC, Bloomberg, and Fox News. And today he's here to help you gain the upper hand as a prop trader. His session is titled The Prop Trader's Toolkit: Prepare, Execute, and Spot Big Trends Before Everyone Else. You'll learn how to identify and ride the market's biggest trends, the 9 indicators price relies on to spot breakouts and momentum, and how to use scanning strategies to filter out the noise. Please welcome Price Headley.
Thank you, Anthony. Good morning, everybody. Thrilled to kick things off. This is a really great topic, right? Prop trading has become a hot area. Everybody loves the thought of trading with somebody else's money, but you still have to have the right mindset for success, right? So a big part of this is, of course, you got to have the tools, but you got to have the mindset for figuring out how to find great trends that can actually help you perform and help you make it worth your time. I also like to get your feedback here. How long have you been trading? Type in a number of how many years you've been trading. If you're on your first year, type a 1. If you've never traded a single instrument, type a 0. If you traded for 20 years, type a 20. I love to get the feedback in the chat of what the experience level is with our crowd today, and it just gives me some feedback. Okay, we got a 3-year trader, a 10-year trader, and that's good, because what happens is, as you have had, if you've had experience, you basically know what's worked and what hasn't. A 10-year and a 20-year trader as well. So pretty experienced crowd with us today, and that's good, because that means you can come in here and say, are you just going to use what you've been doing? First year your trading says another, or are you going to do something different? Sometimes the new traders have an advantage of not having some of the scar tissue, some of the things that need to be taught. It's like my golf swing. I've been playing for 45 years, but maybe I've learned some bad habits, right? I need to unlearn some things and relearn some new things. That can be a little challenging when you're kind of creating new habits. So anyway, bottom line is that new or old, there's a lot here for you. And of course, there's a bunch of great fellow traders as well to come behind me as well. So stick around for the full event. As we get things rolling, just remember that the information provided in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we're talking about here should not be considered specific advisory recommendations. Remember that stock and options trading have large potential rewards, as do all other types of trading, but also they can have large potential risk, right? You got to know what your risk and your reward is and really define that. We're going to talk about how you manage that in your trading going forward. Remember, the past performance of any trading system or method or any examples is not necessarily indicative of its future results. So do so your terms of use on our bigtrends.com homepage here. So I've got 9 potential indicators. You don't have to use them all. Okay, don't panic. Don't think that's way too much to manage, because I do think you got to get to something simple and effective, and then you can kind of gradually layer in additional kind of confirmations and tools to go with your core, right? But you got to know what your core is. And I'm going to share with you a really core philosophy that's led for me to have a lot of big trends, a lot of big moves. And the reason that I call it bigtrends.com, even if you're day trading, you can still find these big trends even on day trading or swing trading timeframes. Okay, so it's not like looking at multiple weeks or months or years of hold, right? We got a lot of success stories of quick pops here, chart examples when we get these setups, how you can find them as early as today with a toolkit that I've set up called our Big Trends Toolkit. It's available on several platforms. We find the most popular one is Thinkorswim. And even if you're using a different platform, you can still get these signals sent to you, given to you in real time, that you can then go apply even in a different platform. But Thinkorswim is one that you could even set up for free as a platform to then get the signals. Bottom line is, for me, if you don't know me, I've been trading stocks and options and other vehicles for 36 years and counting. Caught the trading bug as a student at Duke University and saw the power of really that speed of getting in and getting out with liquid markets, right? We like to trade the active stocks and options, things that are easy to get in and out for literally hundreds, if not sometimes thousands of potential traders at a time. We launched bigtrends.com. I launched it in November of '99. It's always been about a systematic approach, right? Anything you do, you should be able to define your edge. If you can't define your edge, you probably shouldn't be trading until you define what your edge is, how you're going to take money out of the markets, how you're going to control your risk, how you're going to get more bang for your buck when you're right, and less hits, less dings when you're wrong, right? Because there's been a lot of geniuses on Wall Street that have blown up not just their portfolios, but a lot of people's portfolios. You think back to long-term capital management in the late 90s as something that about almost took down the markets, and because of the leverage that they were using and being on the wrong side. And by the way, I always remind people that long-term capital management didn't really believe in trend following. They believed in mean reversion, that things got too extended. They wanted to bet they were going to go back the other way. Guess what? That's called trend fighting, not trend following. You should be learning from that and saying, let's make sure we're finding the trends and following the trends, never fight them. I don't like trying to call tops or call bottoms. I want to get the sweet spot in the middle of a trend move, and a lot of those trend moves will last longer than you or I would expect. So we call it the ultimate prop traders toolkit here. It's a proprietary collection of different techniques and systems and indicators that I use that can be used with the Thinkorswim platform. As I said, they're also available on a couple other major platforms like TradeStation and Metastock, but we're just going to focus on Thinkorswim. Even if you don't use it, it's easy to set it up and then go apply it in whatever other funded account or prop account you're placing your trades in. So we talk about indicators, and we're going to talk about just some principles. You don't have to follow all of these tools. Some of them are different ways that I use, like Larry Williams' percent range indicator, and something called the big trends bands that are a version of the percent R lines, but seen as more of a band. So that's a big one for me, because it shows me when something goes over bought. The biggest philosophy I want you to take out of my quick presentation here and overview is that something going over bought doesn't mean you should sell it. In fact, actually, if it does what I want it to do, it can stay overbought a lot longer than you and I would expect, and that's where I make my big money on the upside, and overbought trends staying overbought. So I'm going to talk about that, how I use it today. Remember that, of course, you can also looking for speed, right? So my acceleration bands, that's how I launched big trends back in the late 90s. I caught a lot of those internet waves on the way up, rode them. Everybody back then was talking about day trading as the path to wealth. And I was like, why would you just day trade if you can swing trade or position trade and make even more on these big tech moves? You've seen it now more recently with the AI stocks, right? AI has been a huge move. It's like the internet bubble part 2, in my view. I'm not saying it's over. I'm not saying it's early, but I'm saying that there's still money to be made. Obviously, we had NVIDIA's earnings overnight. They were monster earnings and the stock's down on the news, right? So you got to know when the conditions are set up well and when they're not. I was telling people to not trade in front of the NVIDIA earnings, that it wasn't really set up for a big move, set up for a little bit more of a digestion phase on NVIDIA right now. But there's going to be other big winners and losers along the way. We want to take advantage of that. CCI, Commodity Channel Index, the 100% above the 200-day average. That's a very unusual longer term technique. Probably not ideal for prop trading. It's more like kind of for big, finding the next NVIDIA, the next Apple, the next Microsoft. That's what that's good for. But the DMI difference shows me when things are a little too extended on the directional movement lines. Efficiency ratio, another trend following technique. We all know about relative strength. That's the relative strength and the relative performance or outperformance that we want to be on those leaders. And then the MACD, we use a divergence tool within the MACD, moving average convergence divergence, popular tool. I'm looking for divergences as a potential reversal and an exit. I don't use it as an entry. I use it as an exit when things start to lose that underlying momentum. Let's look at some recent winning trade examples using some of those indicators. And like I said, one of the first kind of core ones is Larry Williams' percent range indicator. Now, percent range implies if you're looking at something in the past and you're saying, okay, if I knew the range, this is looking at the Qs, right? The NASDAQ, you could use the NQ futures if you wanted, if you're a futures trader, or we like to use the QQQs because the QQQs have options, right? So the QQs actually don't just have options, they have daily options. So I can choose any given day's expiration in the future for how far out I want to go. And we like to usually hold them for 1 to 2 trading days, right? Because I don't want to hold them too long. And we'll buy out about 3 trade days. We got a signal on this one here at the end of the day, July the 2nd, okay? And what we were saying is that this was telling us that we've got a very strong percent R. We use a positive scale in percent R, meaning 100% is the highest that it's been. You see the top of that range here, looking back in a recent highs, was actually just a couple of days before's high, about 552. We closed back about 550 and a half, maybe 1.5 points off there, and the percent R was thus not quite at 100. It was at about 95%. What does that mean? It means it's in the 95th percentile of its recent high-low range, right? It's right near those highs. Most people would assume that's not good. That means you're near a high. That why would you buy something near a high? Because percent R kind of turns into what I call percent T, percent trend, as you're making higher and higher highs here, and of course higher and higher lows in a good uptrend, right? So when we see something that's closing up near the highs of its daily, this is a daily candle here, highs of its daily candle on July 2nd, we're saying, okay, we like that reversal. We would not try to buy and catch the falling knife on that dip there the day before. And you say, hold on, I could have bought it better the day before. You don't know that, right? You don't know that it's not going to keep dropping. What you want is to say, I'm just trying to catch the next leg of a move, right? Then where do I get some confirmation that that existing uptrend, which is what I think percent R shows me when it's super strong in the top 20% of its readings. You've heard of something called the 80-20 rule, right? Pareto's principle. What does it say? It says that 20% of your actions will generate 80% of your results. It's the same way in trend trading. 20% of your trades, give or take, generate 80%, sometimes more of your total profits. You say, how is that possible? That must mean that my other 80% of my trades are bad. No, it just means that the other 80% of your trades are some are small winners, some are small or mid-sized losers, right? And so the idea is that just ends up kind of being a whole lot of nothing in the smaller majority of times, and saying, okay, you have to acknowledge that if it's not one of your best 20% of your trades, get the heck out, move on to one that has a chance to become that, right? That's my philosophy. That's allowed me to rotate, to not get stuck in something where you had hopes for a position. Let's face it, hope is never a strategy. Anytime you talk about any emotions in your trading, I want you to check yourself and say, why am I getting too fearful? Why am I getting too greedy? Why am I getting too hopeful or too doubtful? It's like any emotion probably means you're either trading too large or that your ego is too involved in your own trading process. Okay, that's the most costly 3 letters in my past early history of trading. EGO, ego. Ego cost me a ton of money. Why? Because when I was wrong, I didn't want to admit it. So the small loss turned into a medium loss, turned into a big loss, right? How do big losses happen? Usually start as small losses, right? And so the idea is admitting you're wrong becomes a skill, you have to acknowledge. And so when it comes out of that top 20% of readings, that's when I'm like, okay, this is not firing like I thought. Let's go ahead and move on out, right? this prior pullback got right back to about that 80 percentile level on that day's close there. So it was like, okay, a normal healthy retracement, that doesn't worry me. So we got in there into the day on the second, last half hour of the trading day. We like to get into these QQQ options trades in our QQQ options playbook system. It was just, this is where I'm just giving you the opportunity to get all these tools today, but we do turn them into alerts. If you ever want to get options alerts from us at Big Trends, just check in with us later. But bottom line is that you see what we recommended, this call option purchase, a 550 call when we're just about 550 and a half. So it's mostly time risk, right? We're buying it on July 2nd and we're buying a July 8th expiration. Now, of course, you had the July 4th, the markets are closed, the weekend they're closed, right? So we're going on into the following Tuesday. We give ourselves 3 days out till expiration in this strategy, and we won't hold it more than 2 trading days, right? But our goal is to make a double on this strategy. So we actually managed to take that $4.07, $407 per options contract, controlling 100 shares of the Qs that would have cost you just over 55 grand. You're controlling $55,000 worth of the Qs for just 407 bucks in this example. So what are we trying to do? We're trying to double that, go to $814. And so you can see here the next day it gaps up. We rally on up to 557. That means those options are worth like 7.2 at their high. Intrinsically, how do we get it out of 814? Because there's still time value in that. It still had a couple more trading days to go before the expiration. So we rang the register the next day for a double and said, thanks very much. We take the money and run anytime we get a double in that strategy. So if you're putting in, say, $1,000 per trade, that would get you 2 contracts in at 407 times 2, 814 bucks in. You'd make 814 before a commission of what, no more than $4 round trip on 2 contracts in and out. So 810 bucks net maybe. But the bottom line is that, that's an example of how we put this philosophy of overbought, staying overbought is actually potentially very bullish. Okay, we just look at some confirming kind of day-to-day price momentum to confirm it. You can do the same thing on an hourly chart. You can do it on a 15-minute chart. You can do it on a 5-minute chart. I just find that if I go down too short term in my time frames, I'm going to get more noise, and that noise is something that it's not just something that can fake you out in your actual trades. It also can kind of mess with your confidence. So I personally these days don't really love trading too much below an hourly chart, kind of going with more of a classic swing trade over several trading days to come, or at least the next trading day in this system. We'll look at some more examples. Here's another Qs one, strongly overall overbought. And you say, well, gee, this doesn't look that strong on the chart, right? It looks like a big trading range over the past couple of weeks on that chart, right? But we'd been in a breakout mode back there coming off the April lows, rallying into May and June. It was a late June signal. We're getting that big reversal. And by the way, I love that pattern. You see how we undercut. I'll put an F on that undercut here that next day. The F is the flush, right? When you see a flush pattern where amateurs will put their stops just under the prior bar's low, right? If they're buying something, like, I don't want it to trade under that low. Well, you see the fake out or the flush all the time, and that's an F if you're trading that and getting flushed or faked out at those lows, because of course it rips back up by the end of that bar. And this is a daily candle, but you can see the same thing happening all the time, especially off that first hour's open, right? This morning on NVIDIA, it opened slightly down and then it quickly went positive, and now it's popped back down here, down 3.5 right now. Well, the point of it is like, okay, it's like what happens at the end of that bar, whether it's a daily bar, I'm talking about NVIDIA, and an hourly bar is going to be finished in 13 minutes at 10:30 Eastern. So the idea is that I wait for the end of that bar to tell me what the tone is, and in this case, the tone was very positive. Those other weak holders got faked out on a quick stop out below the prior bar's low, and then here it is closing up here at the highs. About 531.5, we were telling people at the end of that day to buy the 530 calls. We sent out a real-time email to our alert subscribers and a text alert as well, and saying, okay, look, you get this situation where we're saying get in at 430, want to double it to 860 the next day, big gap up, right? Gaps to a new high, trades up to 538-ish. Those options are worth at least 8 intrinsically, plus some time value left. We're out at 860 for our double target. Say thanks very much on about a 1.5%, or maybe 1.2% move in the Qs gets you 100%, right? The leverage there pushing towards 80 plus to 1. 860 bucks in profit on $1,000 maximum investment. You get 2 contracts in at 860. So we always recommend whatever it is, you define your maximum risk that you're willing to take on any trade. And I don't recommend saying, oh, well, I'm going to load up on this next one and exceed that, and the following one, I don't like that signal, I'm not going to take it. That's going to lead you to too much subjectivity. I'd rather you get into a systematic, whatever system you're trading, take each signal on a small scale first, prove it that it works for you, and then you can start to scale up as you gain confidence in your method. So that's just percent R by itself. And percent R the big trends way, right? Looking for the unusual, unconventional, the overbought, staying overbought. Oversold can go a lot lower too, believe it or not. So what happens if we pair up percent R with the CCI? The CCI on this is the blue line here in the middle panel here. So CCI breaks out here at the same point that percent R breaks out. This was Upstart, a trade we made in Upstart. And you see that Upstart is interesting because we got in there and initially we were wrong. Okay, this happens all the time, right? You buy a breakout, sometimes it will pause on you, and is it a healthy pause or not a healthy pause? And one of our rules for our more aggressive, this is our Grand Slam strategy, is that we buy out about a month out on the expiration. The July monthly, this is what we bought here. Bought the 77.5 calls, about 10 points out of the money when the stock was about 67. So you say, geez, that seems expensive, and you're paying 92 cents, 92 bucks a contract. On that strategy, we never pay more than 100 bucks a contract. So we're getting a lot of leverage. But you don't want to get faked out by something that looks like it's just a normal retracement. How do I define a normal retracement? For the CCI, when the CCI tests back underneath its key overbought threshold, it's off of those two lows right there. You see that we're testing that, and look what happens that next morning. See how we test into it that first day, and then we open below it here on the next morning, but you see that after opening below it, I always say wait for the close. By the close, you're back above it. So you've held that support line, even though if you put your stop in interbar, you get faked out, right? We don't get faked out. It rips back up, and you see ends up getting a double. The first target would be target one here. Stocks ripped up to about 72, right? We're still five and a half points out of the money on that first big hour up. And then you see the next pop up to about 73. We get our second target at a triple. And then the last piece, we'd put a trailing stop in and we get X'd out there on the final piece. Unfortunately, at 78% of the last quarter of our position, it would have gone to 300%, which is our usual final target. But hey, our trailing stop did get triggered on that last piece. We still made $1,156 in profit off of a maximum investment of $1,000. We get us 10 contracts for 920 bucks. So you're making more than a double on your overall position. And saying, okay, hey, past performance, no guarantee of future results. But you see, the principle is don't get faked out. Have a plan to say, yes, the market will test you. Now, sometimes you get just an absolute runaway rocket ship. This is the case with AMD. This is why in the old days, I used to wait for retracements as a place to get in. This trade never gave you a good chance to get in until it had already launched way into the stratosphere. This was AMD, a 260 strike call. We bought way out of the money here, right? We get a massive launch on that first hour. This is a 60-minute, right? So we're in the 60-minute here. And you see that basically we wait for the close of that bar, the start of that next bar's open to get in there about 10:30 in the morning Eastern time. And in the next few minutes, my fellow research analysts are going to be looking for more trades to fire even while I'm finishing talking to you here. So bottom line is it's just over 185. We're buying a 260 strike call. You're like, have you lost your mind? You're 75 points out of the money. That's like 40% out of the money. Saying, what are you thinking? Well, we're saying, look, we don't have to get it to the strike price to get a double, a triple, a quadruple. And that's exactly what happened. Look at how everything I'm teaching you, this is the ultimate kind of poster child of exactly what you want to see overbought staying overbought, right? When you launch into the stratosphere, and for our system, we want to see both the percent R in red, the CCI in blue, both launching there, right? And you see that CCI actually gives you a couple of retest points that kind of define those lows along the way, right? Those retests late the first day, and then that one red candle the second day, those were saying the trend's still your friend, right? Still holding that low on that retest. Percent R didn't give you a near retest until we were already out of the trade, right? We got our first target and then our at the double or 110% on, and we saw half of that there to get our risk capital back. Our second and third targets are hit up here. So, okay, on the next gap, look at what the stock's done. It's gone from 187 to maximum of 210 here, right? We're still 50 points out of the money, and we're saying we're done with the trade, having gone from 75 points out of the money to just 50 points out of the money and made 110, 200, and 300%, $1,700 plus in profit off of that, off of that trade. And so the idea is that you see that percent R becomes percent T, right? When we're moving into a case of percent range is now percent trend, right? You're making higher and higher lows. You're making higher and higher highs, right? Almost every hourly bar there. So that's the classic uptrending pattern that you want to be taking advantage of. So that's where percent R is kind of a misnomer of saying these are the unusual top 20% of opportunities that will keep trending longer than you and I would expect, especially how the speed of that too, right? How fast it's moving. You're not losing much time if you're an options buyer and you're taking advantage of that leverage. So the other thing that we give you, obviously I can only cover so much in my 45-minute kickoff of today's special event, but the idea is that when you get signed up for my toolkit to take advantage of the variety of indicators, we've also got what we call our technical trend trader course that we give you a bunch of additional video training that I've captured and archived that you can watch as many times as you want, in addition to a support email and 800 number to call if you've got any questions about any of these techniques, because I can only cover so many of them here in this kickoff. But I'm trying to get you into the mindset of, if you're going to prop trade, you need to find the best stocks and options and futures and basically the best trends, whatever vehicle you're trading. You need to find those vehicles and continue to leverage them. So another one that we like to use is the ADX. That's the average directional movement. Wells Wilder developed this technique along with the directional movement lines, or DMI lines. ADX is your guide to say, okay, if it's trending, you've got a potential for a major move. And so in this case, what we like to see is the blue line is the ADX on the bottom panel here, is just starting to cross up off a relatively low level. And what we want to see is that then even through the bumps in price action, I know a lot of traders will tell me, oh, I don't use ADX, I don't use these other indicators you're talking about because they're just lagging. I will just trade price action. And what happens if you just trade price action is you get off to a good start in this trade, and then look, the rest of that first trading day, it drifts back down. And into the close, you're basically back near where you bought it. And you're saying, well, I'm not getting the validation, so I'm going to bail by the end of that first day because the price action is telling me we've had basically 5 straight candles where we've been flat or lower, and therefore I should get out. Wrong, according to ADX. ADX is flattening out, but it's not rolling over, and it's telling you that, hey, even this little, what I call bend but don't break pattern, when ADX looks like it's starting to bend, that often happens right at a key low. That low does not get violated at the end of the second day after the gap up, right? So we're still, after having cashed out on this system is based on, tracking NVIDIA here, and we call it NVIDIA Options Master. And so we like to sell 50%, a 50% gain on at least 2/3 of our position. That gets our risk capital back. We actually sold 4 of our 5 contracts up 51% to make a little bit of money guaranteed. But then we said, look, keep the runner position, whether it's one contract here, in this case, it was just one contract, remaining one contract, ran to a 773% gain after 5 days. Or you could have said, also watch your ADX rolling over as another tool. We just said we give it 5 days from the first Friday entry to the next Friday afternoon exit. We ran it up on that last runner piece to 124-ish. We had a 109 strike call on it using a weekly 1 to 2 weeks out till expiration option. 109 at 124 has got to be worth at least $15, right? We sold it for about 15 and a half, took down on the whole trade $1,745. But notice the 80-20 rule, we held 20% of our position in this case, sold more than 2/3 to make sure we got the risk capital back on the first target. And the last contract went from under $2 to 15 and a half bucks. That's more than $1,350 of profit out of your $1,745 of profit, right? So you can see the first trade maybe made us $400 and the last piece made us $1,350 plus. So the idea of this is that runner piece can be that 20% that makes you 80% of your profit. In this case, maybe 75% of the overall profit on one simple contract that was held because you could let it run once you get your risk money back. But you see how ADX just steadily keeps rising. The DMI lines tell you that the positive green line's above the negative, so the trend is positive and the ADX is trending. And so when ADX just starts to trend off a low level, I love that as a tool to say there's likely a lot of meat on the bone. One of the questions you have to ask yourself when you're trading is, am I too late? So like a lot of people see this breakout and go, I don't want to chase it. They'd put a question mark there and say, well, maybe I should cash out on that if I got in, or if I haven't gotten in, I'm thinking it's too extended, right? But that little pause, that little flag pattern there that it has in most of day 2 after the gap up, it's very healthy. That's a continuation pattern typically, but we don't have to guess on that based on price action. We said the ADX says keep riding the trend. Okay, so that's what we do with that technique. What about bear trades? Obviously, bear trades. Here's Dow Chemical. You know, we got a Dow Chemical put signal here for our Nifty 50 traders because it was seeing an overall downtrend, but of course it had this attempted up move here, and then it had this flip down as well with the lower close. That's a kind of a classic outside day pattern. Candle followers might call it a bearish engulfing pattern. Point of it is that it's a weakening momentum pattern. So we actually recommended to our subscribers when we're about 23.4 maybe, we said buy about a point in the money, 24.5 put option. You pay almost no time premium. Next day when it spikes down, we say take the 50% profit on short-term options here. In this case, literally we'll trade them a day before the expiration, hop out on the expiration day. So that's a really good way to minimize your time risk and get a lot of bang for your buck. When the stock dropped, you see about a point, maybe a point and a quarter, we're taking down 59% on that, about 4% drop in the stock. So that's pairing the DMI lines, which said they're negative, red above green on the bottom panel, with the price action reversal to say there's downside coming for Dow Chemical. What about JP Morgan? Okay, this is one where JP Morgan was really breaking down hard, and our percent R and CCI lines were both breaking down with it. Right into this pop to the downside there, that was April the 3rd. We said buy the 232.5 puts when the stock was around 230. Next day it pops down to 212. Okay, so it's they don't always move that fast, but you can see in this case that it was a little more expensive option. 590 bucks turned into 1660 for 181% gainer on the downside. And of course that would have only got you one contract in, 590, and you still make $1,000 plus on just one simple contract. That's pairing a couple of tools there. That's using the RSI indicator with the percent R instead of the CCI and percent R. So we use a lot of things kind of unconventionally here. And so what I've set up for you is a super special lifetime access to our Big Trends Toolkit for Thinkorswim, or like I said, you could add it for the a couple other platforms, Metastock and TradeStation. But Thinkorswim is one that's easy to set up, even if you don't have it. Right, so the key is that you start to understand how these indicators work, because we give you the education that goes with the actual technical signals, when to get in and when to get out. So all those tools, percent R and CCI paired together, acceleration bands show me really big positive momentum up or down, that speed that we want, along with the DMI difference, the efficiency ratio, that RSI we just talked about, paired with percent R and the divergence tool MACD. 100% above 200 days, a longer term system. But the beauty is you can run scans. So I don't know about you, but one of the biggest problems that I have as a trader is too many signals, too much information, too much coming at you. So you've got to have tools that sort and scan for the best of the best, or the worst of the worst if you're trading the downside, right? We want to trade those breakouts up. Percent R breakout long and percent R breakout short are two very proprietary trading strategies that are actually available in the toolkit. So literally you can see where's the signal to get in, where's the signal to get out. You can then pair it up with the CCI. You can pair it up with the RSI. You can pair it up with a lot of the techniques that you'll learn across my technical trend trader educational courses that are videos that you get as support to teach you these methods. Another one we didn't talk about on the scans is we'll also look for quick pops on the Donchian channels, which is like if you like to trade reversals, Donchian channels are the best tool in my experience for reversals. Buy the dip, the lower channel, sell the rip at a higher channel against the longer term trend context, right? In a longer term uptrend, I don't short longer term uptrending stocks. I just don't. It's a losing game usually. I short stocks that are broken that then give me a bounce to the top channel of the Donchian channel. So you'll learn the Donchian channels technique in addition to the Donchian arrows. It'll show you where's your buy and where's your sell. So having that visual of the buy sell arrows is really a game changer for clarity, right? Because what you need to do is you need to be studying each of these and seeing which one fits your own particular trading style. Let me ask you a quick question and get your response. How many of you currently keep a trading journal on each trade you make? Meaning You mark down why you bought it, what you were thinking when you bought it, what's your driving indicator in, what's your plan on the exit, and then checking off, did you follow your exit? Did you not follow your trading rules? Give me a yes or no if you follow that. That if you follow it, yes. A couple of you say right away, yes. Congratulations, you're in the minority. If you're and again, when people say, well, gee, trading's a tough game, 90% of people lose. Well, you wonder, well, gee, why do they lose? Well, maybe because they are not tracking their own stuff like a business, right? You've got to treat your trading like a business. If I was getting inventory and orders coming in that I've got to then ship back out, I better have a tracking mechanism to make sure that I'm not losing items based on theft, based on misshipping stuff and costing myself more money, based on all kinds of other slips. That between the cup and the lip that could cause me not to get fed, right? It's the same thing as a trader, right? You need to be learning about your tendencies, what works for you, what doesn't work for you. Everything I'm sharing with you today is literally the product of, for me, more than 3.5 decades, 35 years plus of things that worked, and also, by the way, things that didn't work, right? What I noticed for me, what didn't work, was buying dips on broken stocks, right? Thinking that one of the biggest fallacies that you think is that you think a stock was just at 100 and now it's at 50. Wow, what a bargain. If it goes back to 100, I can double this thing from 50. The problem is if it's on its way from 100 to 50 to 30 to 20 to 10, you say, well, that can't happen. Well, you remember the tech bubble popping? Even big names like Cisco Systems went down 80% plus. Even Amazon.com went down nearly 90%. If you were right about Amazon, and you said Amazon's going to be the ultimate winner, it was out of the tech internet bubble build out, right? Of the big tech stocks you could have bought at the late 90s. Guess what? You would have had to have ridden out a 90% drawdown in the stock before it came back to new highs and beyond. And the question is, could you do that? I could not. I don't think most people could. In fact, you shouldn't be writing down 90% drawdowns. As you know, if you do the math, if you have to double something, you're or not just double something. You say if I write something down by half, I've got to double it to get my money back. If you write it down by 90%, say you had $100,000 in something and it went to $10,000, to get from 10,000 back to 100, you've got to go up tenfold or like 900% just to get back to even. That's unacceptable. That's asking way too much. So if you're not tracking every trade that you're doing, get to tracking each trade you do. It's work, right? It's nobody wants to hear that trading involves work. Everybody wants it to be the assumption that financial freedom means I can do whatever I want. Well, with freedom comes responsibility. It's like, teaching a child that, hey, you have choices, but guess what? With choices come consequences, right? If you make bad choices, then you're going to pay the price in the markets. The markets are really good at exposing your weaknesses, exposing what I call your blind spots. If you're not willing to take losses quickly, it's going to test you and turn those small losses into bigger losses and say, okay, do you want to endure that kind of pain? I don't. I want to take the pain quicker if I'm wrong. And when I'm right, I want to still keep riding at least part of what I'm doing. So everything here is saying, okay, we know that I've showed you a bunch of examples where you could easily pay for an entire lifetime access to all my toolkit techniques with one trade winner, right? And so easily it's worth $9.97, or actually probably many thousands more than that. But the reality is, even just if you paid $9.97, you could easily pay for it. But I'm authorizing today a super flash sale to save you even more money. Let me show you how this works real quick. For Traders Corner, they've been good to me. I wanted to do something special for all Traders Corner attendees today. You get my full toolkit of all the different techniques. Like I showed you, at least 9 of those with multiple systems, multiple scans, get you focused on the best big trends to come, and also teach you how to manage risk on every trade too. Normally best price would be $9.97. I'm taking half off of that. I'm taking an extra $500 off, take it down to only $497, and that's lifetime, right? You don't pay anything else to have access to those tools for the rest of your life. All the big trends toolkit. It's taken me 35 years of school of hard knocks, not 35 years, but definitely my early years, and then basically continue to refine it as we go. It's been through several iterations, continue to add to it. It's got some other really cool tools I didn't have time to show you, like what we call our big trend score, where you can actually score which stocks and markets are giving the best thing. Now you do have to do one thing to get that extra $500 off. You have a promo code here, and the promo code is PROP500. It takes an extra $500 off the usual best $997 price to take it down to only $497 if you act before midnight and you're one of the first 14. BigTrends.com/prop is where you go. Now, when you go to that page, let me show you how to do this. I love our order pages because I'm a big believer in the KISS principle. We don't want to crowd it with too much text and too much noise. By the time you got to this page, you've made a decision. Okay, I want to do this. I want to save a bunch of not getting future losers that I've been trading with the wrong philosophy, but getting on to the next big trend opportunity to the upside. And even if it doesn't work, knowing how to control my risk on every trade. So it's a lifetime access offer. And we even remind you what the promo code is here is PROP500. So you could even literally block that PROP500, right click, copy, and say, do you have a promo code? Yes, it's there. You click on that promo code, it'll pop this promo code box up, paste it in there here. It's the only code that works on this page here. PROP500, hit the apply button over here, and bam, you just saved an extra 50% off of an already great value, turning it into the insane low one-time price of only $497. One quality trade pays for a lifetime of access to the this is our toolkit for Thinkorswim. If you could also take advantage of this and then tell us you want to apply it to TradeStation or you want to apply it to MetaStock. We have toolkits for those too as well. But those are the three big ones here. But Thinkorswim is the most popular one by far, which even if you don't have any of those platforms, you still want to benefit from this to say, I can get the signals out of that. I can easily set up a free Thinkorswim account, and then basically I can see the signals on that, and I can trade that on whatever platform you're using. So all you do is review our terms and conditions, click the I agree button with your payment information on that secure page, and then hit the green complete my purchase button. Or even better, if you want to save yourself all that data input, you can click through to PayPal. If you review terms and conditions, check on that, go through to PayPal. A few clicks later, you've chosen your money source and locked in today's insane value, only $497 for a lifetime of access with support. And oh, by the way, with multi-hour training with my technical trend trader course. It literally takes you through each of those techniques and teaches you how to use them, how to put them to work for your own successful trading, whether you're prop trading or just trading on your own for your own success. Bottom line is that it's all about getting maximum value out of everything that you do. Brian has a good question. He says, what about TradingView? We've had a few questions on that recently, so we're looking at that. We don't have it yet, but the beauty is you could use your TradingView with setting up just a free Thinkorswim access and basically saying, okay, fine, you can see it on TradingView as well. But bottom line is that wherever you place your trades through, once you get the signal, whether you use Thinkorswim, TradeStation, or MetaStock, you'll see the signal, and then you can go apply it into whatever brokerage platform you want. Remember to use that code PROP500, and it's all available there at bigtrends.com/prop, P-R-O-P. Now, bottom line is that you say, okay, do you have to have a lot of experience to do this? No. We've had lots of people that come in pretty new to trading. What I always tell people, though, if you're new to trading, is that your best rule of thumb is start small. Make your first goal not making a ton of money on your next trade. Make your first goal, I want to consistently execute a given system. Okay, so I like this system. I'm going to prove to myself I can execute it. How do you prove it to yourself? You trade small for at least 10 trades in a row and say, I took every one of those 10 trade entry and exit signals properly. I took my winners properly. I took my losers properly. The whole philosophy of big trends is win bigger and lose smaller. Right? When you're right, you want to take advantage of that and not take your profits too quickly. You want to be able to at least get a runner piece on part of your position and say, okay, that's what pretty much everything I've shared with you today is showing you that, yeah, we'll take some profits to get some of our risk money back, but then we'll also let trades run and potentially give them a chance to turn into those Pareto's principle top 20% of your trades, generating 80% or more of your profits, right? That's the aha. And when I got that aha and saw it in my own trading, literally at the end of the 90s, when I was launching big trends more than 25 years ago, I was like, look at all my winners. They were basically my top 20% or even less of my trades. I think I had some stat like maybe 15% or 17% of my trades were generating like 90% of my options buying profits, right? And I was like, hey, this is an aha that I need to follow this pattern, get more of that top 15 or 20% of my trades to get more opportunity into my portfolio. Now you can get it into your portfolio with a special Traders Corner discount, an extra $500 off our usual $997 for our full Thinkorswim toolkit with the educational support. Go there right now, bigtrends.com/prop. It looks like I've answered the questions here, so I'm gonna actually, if you got another question, maybe we got one more minute before I hand it back to Anthony, but I want to keep him on time and say, okay, this is let me ask you another question that might help everybody coming in for future too. What vehicle is your preferred trading vehicle? Are you trading stocks, options, futures, Forex, Bitcoin, and cryptos? How is your plan to take advantage of the big trends to come? I love to see where people are trading. We get a lot of people trading stocks and options. Brian mentions that. Yes, that's my focus, right? I started with stock analysis, but I learned quickly that options is a great way to leverage yourself. And then it's about saying, if you're trading the double-edged sort of leverage, you've got to know how to cut trades that are not working quickly, right? So one of the big skills you have to develop is admitting you're wrong quickly and letting your winners run, right? And that's the thing. If you can do both of those things, options buying can be a very fruitful area. If you have trouble taking your losses, then you're going to have some problems with dealing with that extra leverage, right? So you got to make sure that you prove it to yourself. You can kind of consistently follow your plan. When it's not working, get the heck out quickly. When it is working, learn how to ride those big trends longer with a vehicle like our Traders Toolkit for Thinkorswim. And even if you don't have Thinkorswim, remember, you can just set it up and use any platform once you have those signals. I'm going to give it back over to Anthony to get ready for our next great trader and presenter. Thanks for having me, Anthony.
Thank you, Bryce, for sharing such powerful insights, and we appreciate you being here as well.
Thank you.
Thank you. The special offer link from Price is now in the chat box, so be sure to check that out. And on to our next presenter.
Before we get there, I wanted to mention that Price.
Norman.
I used to run a big option firm. When I think of options, I think of Price. And Mama didn't name him Price for nothing.
You might be onto something,
kind, Norman. Well, you got to check out Norman.
Teaching style. So I couldn't help give you the good word, because you've been around with me all these years.
Well, exactly. We've both been out there for a long time. You got to stick with Norman here, folks. He'll walk you through all the key elements of prop trading success and trading psychology success. You're a master, Norm, at the trading psychology.
You'd think so, and you'd be right. Thanks, Price. Great hearing you.
You too.
Bryce. Next up is Norman Hallett, founder of The Disciplined Trader and a master of psychological performance and high stakes trading. His presentation is called How Not to Blow Out Your Funded Account. He's going to explain how prop trading differs from retail and how to use the red bust out line and green finish line as tools, not traps, and 2 essential techniques to stay within risk limits. So please welcome Norman Hallett.
Thank you, Anthony. Appreciate it. Can you see my screen okay?
Looks good to me.
Okay,
Audience?
great.
Yeah.
Looks like it's burning up, like a lot of the accounts burn up in prop trading. If you're new to prop trading, I think you're going to like what you hear here, because there is a lot of potential. If you've been struggling in prop trading, kind of the same. It means that you may not have been doing the different kinds of things that you need to do for prop trading that you would normally do for your own trading. And that's really where I'm going to. Listen, prop trading has its own set of rules. And those rules are all about keeping open trade equity in your pocket and not letting it go. That's the biggest bugaboo in the difference between prop trading and your own trading. In your own trading, if you have a $50,000 account and you have $1,000 open trade profit in a position, and you want more, and that market comes back to break even because you put in a break even stop, if it was your own money, you'd say to yourself, hey, listen, I still have all my money. I should have taken that $1,000. In prop trading, they count that $1,000 that you didn't take against you in what they call the red line. So I think most of you know what that means. And if you don't, I'll briefly talk about it here. But I wanted to just emphasize the fact that that is not a bad thing. It's a good thing, because this is the way commodity trading advisors like myself learn to secure funds for client accounts. Let's get into it, because this is an hour presentation. I'm going to squeeze in 45 minutes. So I will take my questions on my site afterwards. I'll be manning my own chat. I'll give you the link a little bit later. But remember that futures trading is risky, can result in substantial loss. Only risk capital should be considered. Further, past performance, of course, is not indicative of future results. So let's get going. I went to the University of Cincinnati with math degrees. I have about 15, well, maybe 5 years after I left college, by that time I was running nightclubs, and took me till about 30 years old to decide, hey, I'm going to get into the financial business. I loved gold and silver at the time. Within about, by the time I was 32, I was running this kind of a room. I was in charge of making sure that professional traders did the right thing and were moving in the right direction with their clients' money. All these people were, this is not an exact picture, but it's very similar to the room that I ran with the ancient computers and charts. In any event, my job was to make sure they did the right thing by their clients. And when I call them into my office because they were having a bad time, the idea was that I learned from reviewing all of these accounts how to create responsible trading plans. And if I had to use one word, it would be simplicity. And I think Bryce mentioned that most traders make things much too complicated. And of course, he's right about that. I was bought out of that position as a regional vice president for that option firm by Payne Weber as a commodity trading advisor. Was only there 2 years. There was a lot of selling involved in that I wasn't aware of when I took that contract. But Payne Weber was good to me. It was some of my biggest years. I earned 20%. I'm sorry. Yes, I earned 20% of the profit that I made for accounts, and these were accounts $250,000 or more. Those were some of my best years. Now in prop trading, they actually give you 90%, and it's real, but you got to think and act like a professional. I'm going to show you some of those things that you need to do. Based on my experience in that room and my experience coaching, I've written several books on running trading plans and building them. Books have been written about me. As Price mentioned, I'm really into the mental side. I build my trading plans to accommodate mental problems from traders, whether that be lack of patience, hesitation to pull the trigger. There's certain things you can do about your trading plan to offset that, and I try to do that in my trading plans. Started the Disciplined Trader back in 2000 with the emphasis on the mental game, and just about 5 years ago, I discovered this whole thing about prop trading. I could not believe the potential, and it was real. And I think that prop trading is the best thing to happen to the retail trader, probably since exchange traded options or the micro accounts. But look, I think you wouldn't be here for this presentation if you didn't think there was potential, and there is, but you got to do it the right way. So let's get into what that means. Well, I'm sorry, a little bit about my background. I've written myriads, hundreds of institutional papers for various magazines and so on, but you may even know me from something actually I stopped doing about 11 years ago. My 4-minute drill for traders, you can still see them on YouTube, have over 1 million views of my 4-minute, and it's kind of like what I'm going to put you through here a little bit. I'm not kidding around. Listen, I'm a humorous guy, and you can see whether we're friends like Price that we can have some fun. But trading, it's fun, it's enjoyable. But you got to do it right, and you can't just try to trade. You got to commit yourself to trading. So let's get in. I want to give you an overall recognition that as we move through this presentation, we'll be recognizing the importance of the mental and emotional aspects of trading, and the specific trading techniques that I give you are going to be laced with the understanding that without mental and emotional control, you're not going to make it in this trading or prop trading. At the conclusion of the presentation, I'm going to give you a special offer because you spent your time with me today. And that offer is something that I don't think you've ever seen anyone else do because they're afraid to make it. So stick around at the end. It involves paying me for my expertise and what you buy with your profit. So I think you're going to be interested to see what that looks like. In any event, let's start at the end, because again, from a mental standpoint, when you're too close to 2 or 3 losing trades in a row, you can start to lose it mentally and start talking against yourself. There's a great importance on believing that you're going to be successful, and to look at what we're here for as prop traders. We're not here to pass an evaluation account and be funded. We're not here to get our first payment from the funded account. Yes, those are tasks on our way to what we're here for. We're here for financial independence. We're here for free time, and you got to keep that in mind. And you do that through the potential of what's going on here in prop trading. So let's look at how I would like you to look at this in a healthy way. We're going to talk about a $50,000 account. I happen to trade through Apex. There are many other firms out there. I chose Apex because it was one of the only ones around 4 years ago when I started doing this. So $50,000 account, you need to, in order to get funded, you need to build that account to 52. I'm sorry. You need to build the $50,000 account to 53,000. Once you build it to 53,000 and you close out the day, they give you this $50,000 that you're looking at in order to trade. Now you're going to get 90% of the profit that you generate. So here is a $50,000 funded account. You need to only get to 52,600 before you can ask for money. There's always a red line following you, and rather than going through that, at a $50,000 account, it's $2,500. You can't breach $2,500 below what your high watermark is with open trade equity. Don't worry about figuring that out right now, but just think of it as a $2,500 floor following you. And at 52.6, that floor is 50,100. Well, what does that mean? That means that there's a $2,500 difference between your equity at 52.6 and the 50,100. You've got some room there. This is what you want to keep. You want to keep that spread as you trade and as you build. Now, at the same $50,000 account, when it's funded, if you can build it to 60,000. Now, if you've been struggling in prop trading, you haven't even thought this far probably, but I want to give you a vision of what it looks like when you do get successful, and you can do this. So let's keep going. That 50,000, when you build it to 60,000, you don't have to be quite as conservative as you were before. Although I stress that it's good to continue your conservative nature when you trade. That line stays at 50,100. Okay, so after you pass 52.6, okay, that line, that $2,500 line, stays at 50,100. So at 60,000, now you have a distance from blowing out your account, 9,900. That's starting to feel pretty good, but I'm not done yet. You really want to get that $75,000 level right out to that 65, 70, because at 75,000, that line is still at 50,100. You can start using the same system, but start taking on larger positions, because your gains and losses are a smaller percentage from the loss percentage of the whole. You're $24,900 away, almost $25,000 from the red line. So I want you to vision the fact that we're not here to, yes, you need to pass your valuation. Yes, you need to get to the 52.6 to start asking for money and having it wired into your account. But this is really where this is where we're going. And without this thought on a daily basis, you really start to struggle on the minutia. You have 2 or 3 days in a row where you didn't make any money, or you slid back. You start to think, is this all worth it? Yes, it is, because the payoff is big if you just continue to do the right thing. So let's get into some of the technique that I wanted to teach you today. If you haven't seen it, I don't think you've seen much of this, or at least presented in this way. Just looking at the time, we still have a half hour here. So prop trading challenge number 1, the red line. This is that line that's determined by that 47.5 red line when you start a $50,000 account. Okay, now the issue is that tight drawdown, a 5% of open trade equity high. Remember I said that if you had a $50,000 account and you had a position on that had an open trade equity of $1,000 and you let it dissipate to zero, and you broke even on the trade, this 47,500 would now become 48,500, even though your equity was the same. So this, not only does the $2,500 differential follow you, okay, it's going to creep up on you because you don't secure open trade equity. So in this, I'm going to call it a game of prop trading. It's not a game. Listen, I used to be a professional blackjack player, or at least I considered myself. I did well for several years, and that's a game too. But if you consider it a game, you're not going to make it. If you consider it a career, you can actually make some money if you count cards by counting the low cards against the high cards that are spent. You get a sense of the high cards that are left in the deck. So if I see, if the dealer deals and doesn't put the dealt cards back in the deck, and I see the cards that she's dealt in her first hand, and I see a lot of low cards there, I know that there's a lot of high cards left in her deck that she still is going to deal from. This means to me that I want to now stay on a lower number and let her bust, because she needs to hit to a 17. I hope I'm not confusing you here, but the idea is that in blackjack, there are edges. We have edges in blackjack. We have edges in this game of prop trading. And in this game of prop trading, the big edge is do not let open trade equity dissipate to any great extent. Okay, it's the way you get fired. And if you're a person in that room that I was managing, if they let go of a 2% gain on open trade equity and let the client's account go back to $50,000, they wouldn't be in that room for long. So you want to defend. Now you want to give it some room to extend, but you don't want to let go of anywhere. When you get a nice gain, you want to keep at least 80% of that in your room allowance. Okay, so the tight drawdown is a very big thing. Okay, and the way you defend against the tight drawdown is to grab profits when you have them, and we can talk about what that means. It does mean scalping. That means something else though too. Now, as you're working toward your goal of this 2,600, remember you need, in order to, we're dealing now with a funded account. In order to start getting paid, you need to build that account to 52.6. Okay, and the closer you get to the red line, the more you're backing up. The more, I mean, you could be at 51,000, but if you let too much equity go, open trade equity, that line could literally be at 50,000. Okay, so you only have $1,000 to the red line. That's when it starts to get scary. So the closer you are to the red line, the more stressful your trading becomes, often pulling you off your plan. So here is the solution for you. Every trader really should include scalp in part or whole. I've never been a scalper in all those years of writing trading plans. Yes, I did when I was asked to write a scalping oriented trading plan, but not for me. I've never been a scalper, but in the game of prop trading, you need to be a scalper. Okay, the less you ask from a trade on initiation, the more likely it will be a favorable outcome. It's true of life. I mean, you know, if you ask for the bedroom on the first date, you're not going to get it. A kiss, you may get that if you had a good time. So the less you ask in life and in trading, the more likely you will be. You'll have a favorable outcome. So each successful scalp pads the distance between your balance and the red line. If you think about it, if you apply a trade and the market starts with a scalp in mind, and the market goes to your scalping level, and you take it, and you really should use limit orders for that. Don't play around. You need to measure. We show you how to measure the scalp you need to expect, the amount. You put it there. When you're hit and you take your profit in a scalp, what are you doing? You are grabbing not only equity in your account, but you're padding the distance from the red line, because that amount that you scalped now adds to your distance from the red line, not to the red line. So again, you're not so much looking at the gain that you're making in your account in the equity part. You're much better off in prop trading focusing on keeping that padding and letting the equity take care of itself. Okay, so I use a scalp runner combination in the loaded gun simple trading plan, which I know you've heard of. It's very popular. We use the scalp runner combination. In other words, listen, we all want that big trade, and you really should allow yourself for a nice trade. So when you have a good trigger, you can get that scalp, and it, many times, 1 out of 4, 1 out of 5 times will lead to a nice run. Okay, so you want that opportunity for the run, but you also want to respect the game that you're at. So you want to make sure that you have that scalp in there. So we use a scalp runner combination upon the execution of a trade. That means that when I trade traders, I make sure that they understand that they really need to have at least 2 contracts. The minimum would say would be 2 micro NQs or 2 micro S&Ps, ESs. So the idea is that you want to treat half in that example as a scalp and half as a runner. Okay, and I can give you a lot more on that, of course, as those people that I train. Let's get into the prop trading challenge number 2. Now, again, many of you may have questions, but I will be there to answer them fully on the site that I will send you to, and I'll be on the chat. We can talk about it there. But I want to get this information out because, listen, you know, when I think of options, I think of guys like Price. When I think of prop trading, I think of me, because I've been in it now for probably longer than most. In fact, I've got a book coming out on prop trading, cashing in on the prop trading revolution. It's called Your Money, Their Money, Your Profit. That's the title of the book, cashing in on the profit on the prop trading revolution. And just stick with me. If you're on my list, you'll get information about that. But you want to, in prop trading challenge number 2, in the funded phase, you want to identify a set of frequent, reliable triggers. As I mentioned, there is an importance in grabbing that scalp so that you can pad the distance, but to do that in a respectful way to yourself and to your effort, you need a scalp, you need a trigger that will fire off at least 2/3 of the time. In order to keep the risk-reward ratios in line, a reliable trigger, one that gives you a pop in your direction upon application, at least 65% of the time is needed. Now, a pop means one that moves in your direction within the first few candles. The further you move from a trigger, the less that trigger has influence. Okay, when you put on a tested responsible trigger, the one that I'm talking about here, frequent and reliable, I'm talking about the reliable piece right now, you're going to get a pop 2/3 of the time, enough to take your scalp. The rest is a matter of managing the runner. Okay, and we can talk about that in simple terms at a different conversation. But the trigger must also be frequent. Remember, I'm saying frequent, reliable trigger, meaning that the trigger appears often enough not to challenge your patience as you wait for it to occur. So you need to, again, patience is a bugaboo of many traders. I think you really should be doing some meditations that we also offer in a different part of what we do. We're kind of known for the mental part also, besides the prop trading. But the idea is that you really should be working on your mental state to turn your thinking around as far as patience is concerned. But there are things that you can do in your trading plan to help you offset that weakness of lack of patience. And one of the things that you can do is use a trigger that occurs frequently. Okay, I think I've made my point there. Now, the solution, of course, is having at least 2 A+ triggers. We're working on a 3rd right now. We have 2. It's very, very hard to find a reliable trigger that not only gives you a pop, but has the potential to do much more. Okay, and be frequent also. So you need to have at least 2, what I call A+ triggers, that have been tested thoroughly to meet the frequent and reliable standard. Now, if you trade a single market, you also may want to change time frames to expose more triggers. It's another little trick. If you trade the 2 or then maybe hot to a 5 if you're not, you know, take a look, because most good trading plans will work on any time frame, okay? And in any trading plan, the longer the time frame is, the more accurate, by sometimes just 0.5% or 1% of the test data, the longer the time frame, the more accurate any trading plan is. And so if you're trading the 2, go to the 5 and see if you can see a signal, the trigger. If you're trading at the 5, maybe go ahead and look at the 2 and see if you can uncover some triggers. So that's kind of a little trick that you can do if your problem is lack of patience, okay? And you may want to trade more than one market. Now, I'm pretty good at it. I've been a long time. I can actually focus in literally on 6 markets at the same time. I usually are focusing in on the currencies, the gold, the crude oil, and I'll tell you why in a second. But 2 markets, 2 markets means twice as many chances for your trigger to be created. Okay, so I'm just trying to help you offset the frequent part, but you got to have that trigger that gives you the reliable part. I hope I'm not confusing you here, but I think it's important that you understand how important it is to keep your head straight. And if you can have a trading plan that helps you offset some of the damage that you're capable of doing to your own account, it's a good thing. Okay, so you need a set of frequent reliable triggers so that you can apply that scalp 2/3 of the time and have the ability to manage that runaway position. Okay, and this is what a frequent reliable trigger. This is probably a chart almost several months at least old, but you can see this is one of our triggers that we use, our loaded gun trigger. You can see how often it occurs, and this one had no follow through. Okay, follow through enough for a scalp, follow through not only enough for a scalp but a nice run. Here's one that was a follow through, had a nice scalp and a follow through. This one didn't happen, so you took a short loss here. This one also didn't happen unless you waited. But again, very little loss here. Again, here you had enough to take your scalp the way we measure it, and you'll likely break even on your other. So you want to give yourself as many chances as you can in a shorter period of time. And this isn't a 5-minute bar chart. 2 minutes will give you much more. Just want to give you kind of a vision of it. Okay, let's look at prop challenge number 3, which is in the funded phase, which is the nerves increase as you get closer to the green line, the finish line. Remember, we're going from 50,000 to 52.6. When you get to about 52.2, you start getting nervous. A lot of traders. Okay, so when the account balance gets near the finish line, nerves increase, leading to being too careful, causing hesitation and mistakes. And here's a couple of solutions for you. So you want to trade 2 accounts at the same time. I like to make sure that when I'm trading, I'm always trading 2. But when you get more accounts, you can, say you have 10 accounts, you can trade them in a group of 5 and 5. I like to be a little diversified. A lot of persons use a trade copier to trade all at the same time. I'd rather have a little diversification. Anyway, but let's say you have 2, you want at least 2 accounts, you can trade them the same until you get to that red line. But when you get there, use different contracts. You go a little stronger with one than the other. So that's really what I'm trying to say here. And a positive result, and if you do that, a little bit stronger, say you take on 3 micros in one and 2 micros in the other, a positive result in both accounts will have one breakthrough, and a negative won't set one of those accounts back too far. So you can continue to offset the strength. I actually alternate which one I'm being stronger on the 2. I just switch them up to, again, another diversification and another reason to kind of keep them both in line, okay? So adjust your trading plan to match who you are, emotional truths, in addition to training your subconscious mind to strengthen your weaknesses and emphasize your strengths. Now, you know, this involves what I call manning up. Women, I say manning up because women are much better at this. They're willing to look in the mirror and say, what are my weaknesses? What are the things? Am I chasing trades? Am I revenge trading? What am I doing that's hurting me? And so you need to do your best to match your this is a trading plan to who you are. This is why many of you and most of the people that I run into for help that want my help have bought 4, 5, 6, 7 different trading plans, all of which probably could have worked, some better than others, but they're not willing to focus on what the real problem is, and that's who they are. So here we have, I'm going to show you now a trading plan that was built for prop trading and has in it, we call nuances, that are things that you can do with the trading plan, just small tweaks that you can make that don't increase your risk profile, but will make it much easier for you to follow the trading plan. See, this is where it's at. If you have a trading plan, you got to follow it. So if you can do some tweaks, so if you're a chaser, if you tend to chase trades, if you're a revenge trader, if you're a fearful trader, we've got some tweaks that you can make in our trading plan to make it happen. So, but I wanted to show you, before I get to my offer for you, I wanted to show you some contracts to consider that a lot of my traders have had turnarounds because they've never really considered. Now we know the micro NQs and ES. Be careful with the micro NQs just in case you're a crazy 1 minute chart follower, which I don't suggest really. I really don't. Again, for the accuracy of any trading plan. But the micro NQ and the ES very flexible in your exposure, big volumes, but can add up a little bit with the round term fees. So, and you don't want to let that stop you. I wanted to give that a mention because it always comes up as a question. But listen, if you're a person that's worried about the fees, you're not going to get too far. They're very reasonable. We used to pay $10 a round turn for a trade, for single futures contract, $10 a round turn. In fact, there was a time where we paid as much as $100 a round turn. I know that sounds crazy, but in the very beginning, in the early 80s. So don't fret over $1 or $2. The Euro FX and it's called the 6E and the 6J. The Euro dollar and the Japanese yen, both against the US dollar. These are great contracts. Why? Not only are they some nice bite-sized pieces of a full contract, 100 points in either one of these being worth $125, or you can take on 2 of these and limit your risk to $250. This is the limit that I like to use in a funded account for each trade. I don't want to take any more than $250 risk. And you do it with 2 contracts here. So I can do the math for you some other time, but don't ignore the Japanese yen and the euro dollar. And did I mention, I did, that the currencies tend to trend. So I like to do this because not only can I get my scalp with the responsible trigger, the frequent responsible trigger, but I can also have a very good chance, a better than 1 in 7 chance of having that to that's more of a 1 in 5 type chance where it does wind up to be a nice runner, okay? So I also want to mention the mini crude oil. It's the QM. A lot of people don't know about this contract. It's got enough volume to be worth looking at. These are half contracts. So rather than taking on a full crude oil, you can take on 2 half contracts, which I suggest that you do. So in many cases, you can comply, get a nice quick scalp, then still have a half left to run, because the crude also tends to run, and it runs in certain situations that I can show you on the chart at some other time. Certain formations you can get ready for a run. So these are great contracts to trade. Okay, I wanted to make sure you had those. All right, I want to give you my offer because this is an offer you won't see, because part of what I'm asking you to invest in is your profit, part of your profit. So let me show you what that looks like. This is the loaded gun simple trading plan. It's been around for almost 5 years now, and it's been adjusted 3 years ago for prop trading. Okay, so it's got the core loaded gun trading plan, which is the trading plan. It's got which are just 2 actual videos, less than an hour and a half. And all of those, and even in total, an hour and a half, they're mostly just examples, because it's a very simple trading plan. In fact, all the rules fit on 1 sheet of paper that you'll download and have in front of you. And I'm going to give you all the nuances. I mentioned what they are previously, the tweaks that you can use to fit the trading plan to who you are. Okay, currently there are 7 of them. There are 2 in the testing phase, and we have monthly get-togethers at the end of every month. Actually, this one, we're having it next Wednesday. I had a conflict, so it's usually every last Wednesday of the month. And at that point, I give you some updates that I'm looking at, things that we're testing. We also share experience. There'll be a lot of people with their little boxes, and for new people, we'll share experience. If you got any questions, If you can't make it, of course, sometimes you're on the other side of the world at 4 o'clock on a Wednesday. You'll get the recordings, but you can always email me your questions and I will cover it in those get-togethers. Okay, but here's my bonus for you. Yes, we have the system. I think if you've heard of Loaded Gun, you know the system works. So now let me give you what I believe is an important feature, and that is working with me one-on-one. So I can look in your eyes and ask you specific questions about why you believe that you have not succeeded to this point to the large degree that you'd like to, and what you may want to do in order to fix that. I've met every trader of every type. I know who you are. Never talked to you, but I know who you are and I know your type, and I can help you to manage that through the prop trading and through Loaded Gun. So 90 days, unlimited private trading with me, okay, on one-on-one private sessions with me. And remember that this 90 days doesn't start when you make your purchase today. It's going to start with our first meeting. So take a look at all the material, and it won't take you long. You'll get it. You'll see some of those get-together recordings, and you'll have a pretty good. You'll quickly have a pretty good idea of what I'd like to see you be doing. Then you'll meet with me, and we'll go over some of the questions that you may have. And you can meet with me as many times as you want over that 90-day period, over the first meeting. So if you've got a vacation to go to in September, but because when the book comes out, these prices are not going to be available, and the book's coming out any day now. So 90 days of unlimited private one-on-one coaching with me. Okay. So again, your 90 days start with our first meeting. So if you're a newbie, you got to grab this. And if you're somebody who's been struggling, let's work on it. That's what I do, help struggling traders. Okay, that's my thing. So I just want to make sure that you understood that I'm not kidding around about. I'm going to make it most of the time in the first meeting. I'll say, hey, make a meeting out at least a week or 2 weeks. No further out. I want you accountable to what I've just asked you to do. If you want to, listen, accountability is a big thing in trading. If you don't like accountability, you may not take your first meeting. That's it. But I'd rather we spend a couple of meetings, at least a few meetings, so that I can make sure that you understand and that you're heading in the right direction. I want to be with you every step of the way. So that's bonus one. Bonus two is a month in our trading room. Okay. Actually, it's now Monday, Wednesday, and Thursday in the mornings from 9:15 to noon in the mornings. And on Thursday, it's afternoon 2 to 4. So that's today. And Friday, we don't have a trading room. It's run by Dan, from Dan DeMaria and his son, Matt. He's a former independent floor trader. He's a member of the Chicago Board of Trade. 12 years as the mayor of Morton Grove, Illinois. So you may even know him. They named the street after him, Dan, and we retired this year. And he asked to join me. He's been on my list for a long time. We respect each other as professional traders. Can I run a room for you? Never wanted to run a room, but now I'm doing it because this guy knows what he's doing. He and his son, Matt, who makes plenty of money prop trading, they run the room together. And I'm going to give you a full month in this trading room before I start charging you $99 a month, a very reasonable charge if you want to continue in the room. But I want you to understand, to see somebody running the plan on a daily basis. Okay. I recently joined the Loaded Gun trading room. It's been unbelievable. Dan and Matt, father and son duo, provide a clear trading signals and explain their strategy with clarity and patience. Refreshing and incredibly valuable. Phil Ryu, one of our great traders in the room. And there are a lot of people in the room. We usually have 40, 50 people at least in the room. Private session with Tisha. I want to give you this, and I want to my wife is a well-known subconscious trainer on the covers of most of the major psychology magazines and so on. If you have the fear of losing, lack of patience to wait for your ideal setup, revenge trading, hesitation to pull the trigger, overcoming fear and greed, any issue that you have, I want you to spend an hour with Tisha. Actually, it's about 45 minutes. And in that hour, she will identify your issue, and then she will record for you a specific meditation for you that fits your needs to offset the issue that you have. Okay, it will many times it will eliminate even in a week of listening to the meditation, that situation that you have. But this is probably the most valuable part of what I'm giving you. Okay, yeah, the trading plan. But listen, this is a mental game. Okay, I want you to have a private session with Tisha. Now, this is a vanishing bonus. This bonus 3 is only for those people who move today on this. Okay, you'll have the sessions with me, you'll have the month in the trading room, but this one, because Tisha's calendar fills faster than mine, we still work professional trading groups, and they come to her for their issues. I'm talking about professional traders responsible for millions. You're going to get a session with her. Okay. I just have to tell you that I'm very pleased with your loaded gun strategy. It's brilliant. It's simplicity and effectiveness. I utilized the strategy on an Apex account, made $1,000 across 3 evals, etc. So, Ernie, making money. I just want to show you that, you know, some testimonies that you see are, you know, I've just passed. I want people to get money in the bank. I passed. Mike said he passed 100,000 Apex, 100,000 in 4 days, made $6,000 in 4 days this week. Sandra, who's a very more conservative trader, very good. I'm making some progress now. Really credit your guidance with the 2 voices in my head. She now had funded accounts with Apex requesting my first small payout. I suggested only 500 she got on 2 different accounts during this particular, but she's she's on and gone now, on her way. Ken is a much more aggressive trader. He qualifies for 5 accounts at a time, and 2 days later he had 10 accounts, made $20,000, $21,000 in real money in NASDAQ. So a very thankful guy and a very, very good but volatile trader. So I'm constantly telling him to slow down. The core landing, here's the offer for you. The core loaded gun simple trading plan, all the nuances, the monthly get-togethers, the unlimited one-on-one coaching with me, again, starts with the first session. This is also true of the trading room. It starts the day you sign up for the trading room, which is a separate process, but I want to give you that full month there. And if you work to, if you convert today on this, you get that special issue elimination session with Tisha, where you'll leave with a personalized meditation. But here's my guarantee. I'm so confident that you're following the loaded gun simple trading plan. It's going to result in you getting funded by a prop firm so that you risk their money and not yours, yet still receive 90% of the profit you generate. Just share your trading experience with me, that you followed the simple rules and it didn't work for you. And I will refund your purchase price by plus $500. You never have to do it. Don't expect to be able to do it. It's a trading plan that works, but you got to be able to follow it. Okay, so I want to emphasize the need for that session with Tisha if you believe that that could be your issue, and it is for most people. And I want to get you paid. Okay, so this is what the personal guarantee is all about. So here's my offer: the loaded gun simple trading plan, which retails for $24.97 on our site. And I got to be truthful that I'm always giving 40% off, 50% off when you spend your time with me here, because really I want you to get going on this. Okay, but there are many, I'd say 50% of our traders have, and happily, most of them are former professional traders, so they pay the full price. But I wanted to just give you the rundown here. You're going to get your unlimited one-on-one coaching with me for 90 days. You're going to get access to the trading room, the 30 days. These 2 bonuses, they start on the day you make them happen. So learn all you can. It's very simple trading plan. That's why I call it simple. Learn the techniques, look at the nuances, how they may fit you, then meet with me. When you meet with me, that's when the clock starts. Same with the trading room. As soon as the first day you're in the trading room, that's when the clock starts. And I want you to make sure that you take advantage of the special issue elimination bonus. Okay, the total value is $53.97, but again, I'm cutting this almost in half here, $13.97 for you if you transact today. But I want to, this is the thing you've never seen before. This has been working not only for the clients, but for me. It's been working for me. People are more honest than I thought they would be. Not that I think dishonest people, but I'm going to show you what the deal is. Here it is. All I want is half now, $6.97 now, and the second half from your profits on the honor system. I'm never going to ask you. I think that's why it works so well. I never bug you. I never even look at it. I stopped caring about it. Okay, and when we meet one-on-one, you won't hear anything from it because I don't even know. Okay, so, but it's worked for me, and and I hope it works for you to get you started. I want you to be successful in prop trading. So $6.97 now, and then $6.97 for your profits. Just go to theirmoneyyourprofit.com, okay, and use the coupon code August 28. Okay, now this coupon code is going to be good for a few days. Coupon code August 28, but in order to get Tisha's session, you need to do that today, okay? Because her calendar it's almost full right now, but I think I think I can squeeze in 5 or 6 more that can do that if you move today. Okay, or I'm not sure, but we'll see. And then when I say squeeze it, so you don't have to wait 3 weeks, 2 weeks, a week. I say this offer is good for 25 traders only, knowing that most will take more than a day. But if you're ready to go on this, you really want to do this right now to get that vanishing bonus. But listen, I think I know what I'm doing. I think I've proven it. If you've heard about me and some of the success that my people have been having. So please, $6.97, consider it for yourself if you've been struggling. Do it now, and then when you'll get that session with Tisha, and from your profits on the honor system, you'll ante up the rest. So that's my deal for you, and I really would like you to take advantage of it, because Tisha and I we looked at each other and said, there's nobody like us. There's nobody that helps traders not only with the technical stuff, but the mental stuff too. Nobody like us. We're a team in life. We just had a 44th wedding anniversary, and we want you to be part of the family here. So join the tribe if you're ready, and I appreciate Anthony, what you've given me the opportunity to present.
Well, thank you, Norm. We appreciate you being here. We really do. Your message on discipline and mindset is always timely. The special offer link is now posted in the chat. Don't forget, if you haven't entered the drawing for 2 free funded prop accounts, I'm going to put that link in the chat box again as well.
And remember, Anthony, everybody out there, I'll be on the actual site. I'll be the guy behind. Somebody's behind it now, but I'll be behind as soon as I'm done with Their Money, Your Profit at that, and answer any questions in that chat area. Thank you again, Anthony.
Okay, thank you, Norm. We appreciate it. Ladies and gentlemen, that was Norman Hallett, one of the greats. Oh shoot, I apologize, guys. There's some. I'm not getting the banner to show up. All right, our next presenter is going to be Kevin Bott, and let me just bring up his slides for us. Okay, Kevin, you should be organizer and presenter, and I'll still work on the giveaway as well for you guys. All right, so our next presenter is Kevin Bott, a full-time NQ price action trader who left the 9-to-5 grind to build a 6-figure trading career and more time with family. Kevin's talk is titled Secrets of the Inner Game, Turn Winning Strategies into Profitability. He'll walk you through how to identify emotional comfort zones and how emotional comfort zones impact your trading, why mental state planning matters more than strategies, and when more knowledge becomes a roadblock instead of a boost. Let's welcome Kevin Bott, everyone. Kevin, I think you're on mute.
Oh, there we go. Okay.
Yeah, there you go.
Good morning. Everybody see my screen okay, I hope? Thank you, Anthony, again for having me on the panelist team, and I wanted to thank you and the Traders Corner group as well for these events. Hopefully everybody's been getting a lot of value out of them, especially with all the NVIDIA stuff that's happening recently. Today was a little bit wild. My contention is that in this fast moving world and prop trading as a whole, that we have so many strategies at our fingertips. And I see many traders that I've worked with that are searching for so much knowledge, and then what ends up happening is we search for more knowledge instead of focusing on execution, and we end up getting confused and forget that we probably have everything that we need. So my contention for the majority of people, at least to begin this presentation, is that what if you actually had everything you needed, and what would that look like? How exactly would you unlock the next level? And what if all of our limitations were actually self-imposed and those ceilings that we put in place were actually glass? What if we were able to unlock explosive growth straight away rather than having to wait for the missing piece of the Holy Grail or something like that? So keep that in mind while we go through some of this neurolinguistic programming and some language, and bear in mind some of these questions that I've got for you guys, and then some tools to potentially unlock that explosive growth. So first and foremost, who am I? I believe in proof for promise. Essentially, why should you guys listen to me in the first place? And I've been consistently profitable for years now. I've earned multiple live accounts at top futures firms as a result of my consistency. And I've taught hundreds of people how to become consistent trading price action, both with a strategy perspective, which I'm not going to go into today, but also the mental models on how to really be able to follow our strategy, how to not get caught up, and then how to unlock that explosive growth for ourselves. So I've pretty much been anywhere that you guys have been. I've been at the lows where I've found many ways that the market does not work, been frustrated. I've had some limited success where I've blown it all afterwards and had to really go back to the drawing board and reset. I've had 100 grand payouts on deck that I've let go. I've had all kinds of issues that whatever you guys are facing, I've likely been there. And through this experience, I've actually created ways to get out of it, which is more important, I think. You know, it's not exactly whereabouts we are, it's what we assign to that story. And if we can approach that from a, you know what, I'm going to look back on this hardship that I'm going through right now, and in the future say, you know what, that was actually some of the best transformation that I've gone through. And I think outside of trading as well, that happens quite often. We go through periods of pain, and then we end up really growing massively as a result of that. So we don't need to sit there. It can be as fast or as slow as we'd like. Now I have a foundational knowledge and extensive experience applying the mental models, the NLP concepts in here that have also worked for others as well. So this is something I live by. It's not something that I think sounds cool. I don't believe that that all the neuroscience and mental game stuff is there to look nice. I think it's meant to be there to fall back on when we get through difficult times. Now, the Luminary Trading mission is to empower traders and arm traders to make better decisions. This is our group that we trade with, and the idea is that we're the sum of our good and bad decisions. We don't just make good decisions. Obviously, we make bad ones too. But when we make bad decisions, we think that we only make bad decisions, and we forget all the good that comes out of it. So I think that it's important to take us as a whole, that we look at all the good and bad that we make through the day, and then we try and tweak the bad, and then we try to really look at the good and go, well, okay, how do I make more good decisions? And that leads to better habits, and better habits ideally over time will lead to more money, which is the main reason I think all of us trade in the first place. So from a strategy perspective and a mental perspective, our brains all work the same way, but each individual has a different story. So there's no sense kind of putting one size fits all, both with a strategy environment or a mental model environment to everybody, because everybody has a different representation of the world. So we look at trading being very simple, but not easy, okay? Now, to get into story, strategy, and state, and exactly what we're talking about, and you guys might have seen this from my last presentation, this slide, as I feel that it's pretty much the cornerstone of the mental model. Our story is our identity. That's our character. And we'll go into that in a little bit. But for right now, our story, our strategy, and our state, they form a very, very deep and meaningful relationship amongst itself. So our story affects our state affects our strategy, and then our strategy essentially comes back to to our story and state as well. So all lasting change, ideally, we don't want to just make money 1 week out of the year, right? We don't want to just, if we're going to become stronger and more fit or athletic and look in the mirror at ourselves, we don't want to just work out for a week, right? Or for 2 weeks, and then that motivation dies off and we're back to where we were, right? All lasting change begins with a shift in our story, as in we choose to be somebody else. And quite often I see people will write things on their trading view chart, follow your rules today, or I am disciplined, or I am this, or whatever. It's some of the most destructive stuff, because if you're like most people, your mind probably goes, well, what about yesterday? No, you're not. You're not disciplined at all, right? And by the way, here's proof, So then we're fighting with ourselves, and that creates all kinds of problems, doesn't it? So it's choosing to be somebody else directly. This is who I am now, as in I was this person, I'm now no longer this person. And the concept of NLP is that something has to change, that something has to be me, and that something has to be now. It's not in the future. It's not, when I feel like it. It's not somebody else that I can't control. Something has to change, and it has to be me. And by the way, it has to be now. I can't go on doing this. I can't go on breaking my rules. I can't go on being undisciplined or not letting trades run or whatever. It has to be now, period. And if we look at a simple analogy like that, then if you're a smoker, you're carrying around cigarettes. That's the strategy. That's a losing strategy for quitting smoking, right? Probably not going to work out very, very well. If you're trying to get in shape and you're carrying around cheesecake 24/7, you're probably going to have a difficult time, right? If you're also unresourceful and you have a winning strategy, right, and you approach the market in the morning and you didn't get very good sleep, or you're distracted, maybe you're on your phone half the time during the market, simple things that we're like, well, that doesn't make sense, right? But we do different things subconsciously where we set ourselves up for failure, even though we want or have a model of being disciplined, and then things come off the rails, right? So our state affects how well we're able to follow our strategy. Now, I think that a lot of people have strategies for the market, and we work through those strategies quite a bit. We try and focus on, okay, well, my method of entry or my method of holding or my stop, I got to work on this more, but we don't work on the mental models that we have in trading. We don't do a lot of mental rehearsal the night before. Find me a professional athlete that doesn't do mental rehearsal the night before. You'd be far and few between to find that. And yet as traders, we don't think that we have to, or we at least don't know that we should. So my contention is that we need to have strategy for the mental game, which is equivalent, if not more important than our strategy actually in the markets itself. And part of that is the mental rehearsal, where we actually go through and you're imagining your setup the next morning. You're getting involved with the emotion. So for example, some traders that I've worked with, their issues, they get in so early, their mental rehearsal is that they're imagining all the emotions the next day, and they're disassociating from them. And what they're doing is they're actually seeing themselves, despite everything going on, they're waiting for their target to be hit, despite everything that's going on. That's the mental rehearsal, not just kind of thinking about things, but actually rehearsing properly. And there was a study back in the day where they had 3 groups of basketball players. The first group shot hoops for about 2 weeks. The second group didn't shoot anything or do anything at all. And the third group only envisioned themselves properly shooting basketball. And what ended up happening was the first and the third group had the same improvement in their game of shooting as each other, even though one of the groups didn't touch the basketball at all. That's the power of our mind. Now, to get into story, what do we mean by this exactly? And that's, again, like I said, it's our identity, it's our character. It's how we view and code the world in our minds. Our mind is extremely, extremely good at deleting, distorting, and generalizing information. And that's by design. If you're driving down the street You see every tree, right? Quote unquote, see it. You see every person, you see every cloud, you see everything that's going on. But if you are focused on all of it, then you're going to have a really, really hard time driving, aren't you? Whereas if you see a red light, you've trained yourself to focus on that red light and what it means. It means you should stop, hopefully, right? And the same thing works in the market as well. We see every single tick of price action. You do, I do, we're all seeing the same market, but we're focused on very, very different things. So if we were to process each individual tick, each individual up move or down move or whatever, we'd lose our minds. So what then is the reality of it? The reality is that we focus on very, very specific things. And even when it's not real, we can focus on that. That's the power of fear. So the market's going straight up. Somebody is going to be afraid that it's going to drop back down, even if that's not real. It very well could just continue going up. And if you're like me, you've likely been there where you've been inside of a long position or a short position, and it's continued on its merry way, but you've invented reasons that it's going to drop or go against you, right? So what we perceive our reality to be is a lot more important than what the actual reality is. Two people will see a car crash, they'll have very, very different experiences of that. And there's a reason for that. So our focus determines our reality. Now, when we get into story again, as I've seen here, an easy anecdote is that we've seen many movies where you have some main character and they're a very, very average person, right? Nothing special. They're just kind of going on, living their life, whatever. And then there's a major event that goes on that drastically alters who they are. And yeah, sometimes it's a radioactive spider. Sometimes there's a magic lamp. You know, sometimes there's a wizard that casts a spell, whatever the movie case may be. But they become somebody else entirely immediately. And you'll notice that they don't go back to who they are, or they can't. And a lot of that has to do with like the mind itself, but that initial wall of belief where they're now kind of envisioning who they are and kind of coming into their new reality. You'll find that their beliefs about the world, their beliefs about everything that's going on drastically change immediately as well. And once they actually understand their new reality in these movies, that leads to explosive growth of the character. And there's no reason that that can't lead to explosive growth for us as well. So again, we talked about ceilings and meaning. So when we go into story and our representation of the world, we talk about meaning. And this is where things get individual. So many of you guys will have very, very different meanings of price action and strategy and your mental model and your representations based off of your initial days of trading. And what ends up happening is we self-impose ceilings on ourselves because of these events that go on. Because what our mind does is it does things for two reasons. We're either getting pleasure or we're avoiding pain. It's the only reason we do things. So what happens when we associate specific trading habits to be painful, when they're actually good, when they're calling aloud for remedy? We're meant to grow, and yet that's on the other side of fear. So we have all these quotes by quote unquote trading psychologists and whatnot on Twitter or wherever else that feel good, look good, but the reality of it is that on the other side of that fear threshold, that's where the explosive growth comes in. So if we have the tools to shatter those ceilings, then that really ushers in a massive period of excitement and growth for us. But we have to first understand how exactly do we do that? And the first way we do that is we gain knowledge and awareness of exactly what patterns those are. So to illustrate this idea, because this is all very nice theory, but what does this exactly look like? Let's take a look at this ES chart here. And if we look at these trades, forgive the, let's imagine, these weren't my trades, by the way, just for happenstance, but let's imagine that this was somebody's first day of trading. And this is quite often, you know, something that will be very, very common. And I want to illustrate a few points here. Obviously, we see that there was one break even and then 2 losses that occurred. But let's look at this from a meaning perspective, and you guys will likely find some tangibles here. So let's suggest that this person went long here on this ES chart, and they were targeting this high. They did a 2-to-1 trade. They've been back testing. They've got this, that, or the other. They're happy days, and this market's going up. It then comes down, but you know, they're holding. It's their first day of trading. They're holding for the moon, right? And they get this going, and they're elated right here. Obviously, market's flying in their direction. They're going to make some money. Trading is easy. I'm a legend. I'm going to tell everybody I'm going to be able to retire my parents, right? Away I go with my Lamborghini, and then it comes down, and let's say they stop out here. Now, what ends up happening usually for people that are early in their trading and career and whatnot is that they will attach different meaning to this price action. And what usually ends up happening is the first wall of we need to be right. Our ego loves being right. And what ends up happening is this goes down, doesn't come to their stop. So they were afraid here of it coming down and taking them out. So they took their position off. And then they look at this and they don't get it back in here. They look at this and they go, well, I shouldn't be out of this in the first place. Why am I out of this? I let fear dictate X, Y, Z, and they hop back in again. Who's ever done this before, right? I know I have. And then what ends up happening is they get a brief moment where they're like, oh, this is working out. This was a good decision here. And then they get smacked down. And then it runs out this low, which was their stop. So now their emotions are running wild. Now they're running wild. They're kind of going at this. The market's now impacted them personally. They're red on the day. They're not happy at all. And they're looking at this. Maybe I should short. Let's omit that from this discussion right now. But they're looking at this movement and it doesn't break this low. So now they're going, well, okay, I was wrong. I need to be right. And maybe my stop wasn't wide enough, right? And then this ends up going, they don't get involved here because now they're looking to determine if this is going to go short, or maybe they do short here and then they get wrecked. But they go, okay, well, what's the lesson from this? And it goes sideways. So they're like, okay, well, this looks like it's going to pull back. It didn't take this low. Doesn't that mean we're going higher now? Reversal time. And then they hop in here. And the market goes sideways. They start looking at this as their stop, continues on. And what else happens? We move our stops, right? We can't be wrong again. That's not who we are. Or worse, they're adding to losing positions down here. Now, the point that I want to make isn't necessarily these trades. There's 2 major things that come out of this. The first one is that our minds now are in immense pain. They're in immense pain because quite often the initial trader, even though they go into the market and they know consciously, you know what, I'm going to learn this. I've got different things that I need to pick up on, whatever, give myself a little bit of grace. We don't typically do that. We're like, okay, like I've really got to get going here, whatever. And that leads to immense pain when we get setbacks. So the mind, not knowing anything that we want in the future, looks at this and they go, well, I'm in immense pain here, so I don't want to feel this way again. So what it does is it attaches immense meaning to what's going on. In other words, it looks for a pattern to protect itself against feeling this way in the future. And that pattern usually ends up something of one of a few different things. The first one being, don't let a winning trade go back to break even. It'll look at this and go, well, this was a beautiful decision. I probably should have done the same thing here. And I probably should have done the same thing here. Right? Who's had that happen where you don't want to give back profits? And then what ends up happening is on a different day where this actually runs, right? Or let's say, for example, they short here and they get taken out here before the movement goes. Or they're long here and they get taken out before the movement goes, and this actually runs the next day. Now, consciously, we would go, well, I'm not trading based off of something that happened 4 years ago or 5 years ago. But the reality of it is that you're still operating on those programs, likely ones that happened in your teen years. And until we acknowledge and understand what those limitations are, we're doomed to forever repeat them. And if you don't believe me, who's ever dated somebody that had the same name as your ex, right? You've associated something to that name. It's likely that you've avoided that name in the future. You know, we operate like that. The mind will search for meaning. The other one that goes in is perhaps something like take profits early. There's many different patterns that come in based off of these initial trades, these initial trade ideas that we have that go on, right? And then what ends up happening is, say you take this trade and, oh, okay, well, I made money here and then it dropped against me, so obviously this was a good idea. And that leads to detrimental trading in the future, because now you've got this ingrained habit where if you get a beautiful trade that ends up actually working out properly, you're now taking a small amount of that, but you're also taking full losses. So it ends up being very, very detrimental to our trading long term. The second thing, and this is the big one in my opinion, is that we focus on the actual execution that we have, the actual decisions that we made. Was this a good decision or not? Was this a good decision or not? Was this a good decision? And those of you guys that have blown accounts, I know I have, is that this is not the main thing that goes on. This is not the area that we actually need to work on. This is all strategy, which we talked about, but it's not the mental game. The mental game usually occurs before this first trade happens. And this is where the explosive growth for the majority of you guys comes in my opinion. Because what ends up happening is this trade ends up being formed out of the emotions that occurred beforehand, where you've perhaps looked at wanting to short, but you never got involved and you had to watch this entire move drop. And now your patience is wearing thin. You're looking perhaps at maybe you've gone long in here, or you're thinking about going long and then that didn't work out, or whatever goes on before here. And now we're putting all of these trades framing off of the emotions that go on here. And we call them FOMO. We call them tilting, where you're taking many different trades. We're calling it adding to losing positions or ego or whatever. But it's the management of what happened before the execution, the self-talk that occurred in here, where you're now going, okay, this is going to the moon and we're hopping in here instead. So pay attention to that self-talk that occurs beforehand. And in the interest of serving you guys as best as possible, this is something that that my wife, who's an NLP master practitioner, she's actually put a lot into our school community for free for you guys that that we'll go over later as well. Now, the key to success, which I believe was the title of our presentation, where we talked about state and the mental model, is that we have to look at framing. And framing, you'll find, is one of the massive differences between successful traders or successful athletes. We've worked with professional athletes. We've worked with extremely profitable business people. We've turned people from being break even into making $20,000 in a week. We've done a whole bunch of different things. We've mentored top 100 traders at prop firms, et cetera, et cetera. And one of the similarities that the successful traders have that the ones that are struggling is their framing. And I don't just mean framing as in, you know what, like this is not failure. This is just feedback, although that's obviously a huge part of it. But it's how they view the market itself. For example, if we look back at the prior slide, they'll look at this movement and they're able to actually look at these movements back and forth within the view of the actual market itself. So they're not getting swept up in the emotion of the candles. They're looking at it in terms of their strategy and their ability to actually facilitate their strategy. So they focus on different things. You guys will have the exact same candles print that we do, right? But we focus on different aspects of that price action. And that determines our reality. So how do we do that? And it sounds very, very cliche and simple, but we have to ask better questions of ourselves. Because our minds are computers, if we ask a garbage question, our mind's gonna go, here you go, right? Why do I keep blowing up accounts? Why do I take 10 losses in a row? Why can't I make this work? And our minds go, because you're an idiot, right? It ends up having a stupid answer for a stupid question. So what do? Well, the first thing is we have to ask better questions, right? Rather than why me, why this, why that, and this sounds very cliche, as I said, we start going, well, how do I get involved properly, right? How do I get involved in these trades and be on the right side of the trend? And now we start looking at, okay, well, you know, very, very simple in this example, where you've got a major massive movement, you've now got a retracement, right? We're now looking at this continuation, and very, very simple and easy, right? So now we start asking how questions. How do I hold for longer? How do I get involved without having such a wide stop? How do I end up letting my trades work to actual targets? And then the creative parts of our mind end up being activated. And what ends up going on is not only have we shifted ourselves from a victim mindset to a, you know what, I'm actually going to improve. This is all feedback in my system and I can improve. We end up being in a very, very explosive growth stage once we get more empowered that way. Now, we often in trading will look at these symptoms as, you know what, we've got blown accounts or lots of losses or big losses, but that's essentially like, you know what, I'm not happy with my weight, or my energy levels are low or whatever, and I'm going to focus on taking a drug to improve my energy, like coffee. Okay, so I'm now having 7 cups of coffee a day, right? That's a symptom of having a ridiculous diet, right? So smart people would go, well, if I eat better, then all the rest of my symptoms go away, right? But in trading, we don't do that. We think that it's some island where all the things that we need to improve on are only for trading itself. It doesn't work the same way as the other parts of our world. And the reality of it is that the only reason that trading is so difficult for the vast majority of people is that the reward for doing proper things is often negative. And the reward for doing improper things, in other words, you know, say shorting here, you end up making money, or shorting here and you end up making money. Say somebody takes a small trade here and they make money. Well, they're rewarded for that with the outcome that they want. They think that's a good decision at the bottom of a range. And then they try and do that again and again and again, and they get wrecked here, or they get wrecked, say here, or whatever. Now, I mean, let's actually use this from like a scalping perspective rather than having an actual stop. I don't think anybody in here would be too interested in shorting this, but anyways, my point remains that we usually will reward things for bad decisions, and then that's the most dangerous part of trading, where we get rewarded about 20% of the time for doing bad things, but we continue doing it because it makes us feel safe, right? So we focus on the source, and that source is that self-talk, that identity, where if we identify as XYZ, then we have a strategy and a model to make that both consistent and actually last for a long period of time, despite the tests that come accordingly. So, few questions for you guys in the idea of serving you guys as best as possible. We look at framing, which we talked about, which is our perception of a particular event based off of our internal communication. One person will look at a strong movement in the market very, very positively if they're long, right? But if you're shorting here, are you happy that it's doing that? Probably not. That's our different framings of it. Same price action, completely different framing. So when we take losses, are they frustrating? Do we have a really, really hard time taking losses? Does it impact our ego? Or do we look at those losses as, you know what, this is either just part of the business, and you know yourself, if you're lying to yourself, that you're like, you know what, I look at my losses, but those are just part of trading. I know that that's true. But the emotional attachment to taking a loss is frustration, right? So be honest with yourselves if you're actually looking at this properly. Now, if you think back on a recent positive experience where maybe you passed an evaluation, maybe you got a payout, do we drift to perfection? Do we look at, you know what, I passed that account, but hey, a couple of those days, man, I did not trade very well and I made money, right? Do we look at needing to be perfect and taking away the achievement from itself? Or do we look at it and go, yeah, I just passed. Yes, I just got a payout. I'm excited for what comes next. Very, very different framing. And then externally from trading itself, right, just to kind of hammer this home, do we have a current opportunity you feel you don't have the time, the money, the resources for? Our contention is that we don't typically have a lack of resources, but we have a lack of resourcefulness. We usually make excuses or shoulds and don't really do the things that we know we need to, or that would really excite us. Okay. Now, the last thing with framing is that we typically like to model success, and we usually, ideally, should have a group of traders that we believe are successful, that are either at our level or above, because proximity is power, and you guys are the equivalent of the people you spend the most time with, both with your outlook of the world and framing. So we have an idea of what the successful trader looks like, and then we simply have to model that behavior. If they're successful and we do everything they do, well, then we're probably going to be successful ourselves. That makes sense, right? And we have an idea of what they do and what their habits are, right? They only trade their system. In other words, they only focus on specific things. They accept losses as being part of the game. They don't have emotional attachment to them, or at least they don't let it affect them, right? They let their winners run to target. They take their stops. They have specific personality traits depending on whatever you guys are. Maybe they're extremely calm and stoic no matter what's going on in the market. Maybe they just are happy-go-lucky and they're not fazed by losses, right? Maybe they're a single parent or something, and they're super mom or super dad, and they've got 4 kids on their arm, and they're destroying the market on a daily basis. I want to be like them, right? And they have no concept or concerns regarding failure. In other words, it's not even a possibility that they're going to fail, right? They're going to push on. They're going to find a way or make the way, and we can all emulate that, I believe, as well. These are all concepts of framing. Now, the last thing that I'm going to leave you guys with in terms of the mental model is the study of NLP itself, which is why we do what we do. So in our awareness of ourselves, we have to also understand whereabouts we are. And as we change our story and our identity, usually what ends up happening is this explosive growth phase comes in. And we're a perfect mirror of that, right? Both of our fears and limitations and our strengths. Now, the markets and life are fractal by nature in terms of what goes on, and we've usually been through periods of hardship where things are going very, very difficult, right? Maybe we don't have a lot of money and now we've lost our job. Well, your thermostat, right? If this is base and that happens and you've lost work and now you've really got to figure out what you're going to do to survive, your temperature might be all the way down here, and then what happens? Our mind clicks on and we start thinking of 101 new ideas. I'm gonna get 6 jobs, I'm gonna slash my spending, this, that, or the other, and I'm gonna get back to whereabouts is comfortable. And wherever is comfortable, you'll find, is exactly where your comfortability of your identity is. And what ends up going on is we start a new business, we work 10 times harder, we get a new job, whatever. And when we get a new job, what usually happens at that new job? How engrossed in the work are we? How excited are we? We usually do a phenomenal job for our first few weeks, don't we? And this temperature goes flying through the roof. Now we're at 100 degrees. We're operating at a superhuman level. We're going flying. We're getting praised at work. We've got more money than we had before. We've got a new business and we've got a new job. Let's go. And then our minds at the same time go, we're not meant to be all the way up here. This is too hot. And we stop pushing. Return back down to our comfortability. And this works in trading as well. The amount of people that I've seen that get close to a payout or close to passing an evaluation, and it becomes real for them. And then all of a sudden, it's almost like there's like a switch that comes in and they self-sabotage. And they think it was that one trade. They think it was their strategy that needs tweaking, that they need to have some other indicator on their chart. They think it's X, Y, Z of what's actually happened that day. And what ends up going on is they completely discount the mental side of it, right? They acknowledge that they went on tilt and that there was mental issues that day. But that's like trying to put a Band-Aid on a severe knife wound. It's just not going to work, right? What ends up happening is we have to understand, like, let's push higher, but we're only as good as our standards and our character and our identity. So we have to actually understand when things are going well, like, let's push. This is when we don't slack off. This is when we don't take the weekend off of going to the gym. This is when we don't stop looking at the charts and studying this, that, or the other. So when we size down when things are going very, very well, which is counterintuitive because many people will say, well, when things are going well, size up. But that's only when you're trading well, not when the outcome is positive, but when you're actually trading well. So like the markets, we tend to have positive and negative events that really dramatically adjust this thermostat of our life, right? If you get into a breakup, usually people will hit the gym, they'll get their life together, and they'll get through right back to that comfortability, right? The economy goes to shit. Well, then, we buckle down in that period of winter, and then up we get back to here eventually. Winter doesn't last forever, but the same thing happens in the positive aspect. Now, this is our free offer for you guys. We have a school community. It's been started recently. We have a bunch of people in there, and we put up some protocols for the mental game. Some of them are hypnotic in nature, and this isn't any sort of woo. This is backed by neuroscience, where you're actually becoming somebody entirely different. We talk about mental models, and we talk about the ability to break through limitations, or at least understand where they are. But the huge thing is that we're actually looking at knowledge and the purpose of knowledge, which is just potential power. We want it to lead to execution. So I actually have the link to our free school community, which I just put in there. And my offer to you guys is pop in there, say hello. We'd love to hear about your guys' trading journey. Yeah, just basically introduce yourselves, talk about whereabouts you are, and if we can help you as best as we can, as we've helped many others, then away we go. So I think I've got a few minutes left if you guys want to ask some questions, and if not, then thanks very much for having me, Anthony.
All right, Kevin. I'm not seeing any questions. That was a really great presentation. If there are any questions, please let Kevin know now. All I'm hearing is just great feedback right now. But if you guys have any questions, please. Kevin, I got one question. How did you get into studying NLP?
Well, for me, it's always been a big thing for personal development. I kind of fell into the law of attraction, as I think a lot of people did with the movie The Secret and whatnot, and then reading Think and Grow Rich, which I think are staples as well, but I think they only give part of the picture. It's all sort of knowledge, but the NLP side of things, I was struggling with trading a lot, and then and there was different reasons for that. So what I did was I ended up going to a Tony Robbins seminar and really sort of unlocking the NLP potential. And then through my beautiful wife, she still works with me and does a lot here. But it was just sort of this, you know, when you get a taste of personal development and self-improvement and you start looking for patterns in the market, you tend to find patterns outside of the market as well. Like, hey, you know, if I want to improve X, Y, Z in my life, it actually follows the exact same thing. There's a science to it. So sort of studying that science and how that improves every aspect was really, really curious and interesting to me. So it was like, you know what, if I want to grow my business, well, what limitations do I have? Do I actually feel that it can, right? If I want to actually grow in my personal health and achieve new heights in my physical shape, well, you know, then there's different things there, and then you end up running into these walls where you're like, you know what, I've never been this, that, or the other, you know, and that's scary, but it's that ability to push through. And I think the way we talk to ourselves pretty much just impacts everything. So I found it very, very curious, and I'm very fortunate that I've got my wife to fall back on for that knowledge too.
Wow. Yeah, I mean, I found it pretty incredible too. So thank you so much, Kevin. Thanks for helping us refocus on the mental game. It's so important.
Yeah.
Kevin's special offer is now available in the chat, so please check it out. And thank you so much for being here, Kevin. We really appreciate it.
Cheers. Thank you.
Cheers. Next up is Gary Donahoo, founder of Viper Trading. Let me make Gary the presenter for us. Oh, Gary's the presenter. Thank you.
All right. How's everybody doing today?
Good, good. How are you?
Doing great. I just did a trade on gold. I'll show it here in just a second. But what I want to do first off, let's go ahead and go over a standard disclaimer, because basically when you're trading futures, you are trading at your own sole discretion. So please read disclaimer. Everything I'm going to talk about today, obviously, not everybody can trade out there in this world, just like I was hearing gentlemen just a minute ago. You know, a lot of people lose money trading futures. So, you know, keep in mind that,
before the drawing. Imagine knowing which way the market's going to go before you place your order with some kind of with some degree of certainty. Now, nothing is 100%, but we do believe that we provide our members with a significant edge when trading the financial markets. We've been around for about 14 years, and along the way, we've built a beautiful community of traders of all experience levels, you know, that help one another through this trading journey. And wow, what a journey it is. My goodness. You know, they didn't say it was going to be like this. You know, when we get those emails, those marketing emails, they say how we're going to make all this money really fast and really easy. And I couldn't wait to jump in head first, only to get a big bump in the head, you know, a wake up. So that's what I mean by they said it would be easy, but they weren't being 100% truthful. So I just want to give the members of my team just an acknowledgement without putting you to sleep. It's important to know that it's not me flipping the switches and pulling the levers here. I'm part of a really educated and experienced team of not only traders, but software developers and engineers. And, you know, it's been our mission, and I like to say mission because it truly has been, to provide our members with an edge. Just to give my team members some credit, let me start with the professional traders. We have our futures traders, which Mr. Craig Emery and Mr. David Kushner. And we have our professional options trader, David Wise. Man, he is incredible. So we have two really nice revenue streams with futures and options. Behind the desk here at Right Line Trading, we have Mr. Brock Miller. He's our college student getting his degree in computer science. Then we have our advanced degrees, we have Mr. Charles Sider, has his master's degree from UCLA. He is a Bruin, and he is an engineer through and through. He's really become a community favorite, not only because he's meticulous at developing software, but he's very willing to help, lend a helping hand to our members. Then we have Mr. Sergio Luque Rodriguez. Old Luque, I've been working with Luque now for over 10 years, right here at Rightline, and I've seen just the incredible advancements and growth in Sergio. You know, we don't usually see the growth in ourselves, but when we can often see it in other people. And I have definitely recognized Sergio. When I first met him, he could barely speak a word of English. He came over from Cuba. He had a master's degree in computer science, but you couldn't really hold a conversation with him. But let me tell you this, and I underestimated him. I've seen him go from developing complex mathematical equations to algorithms to mathematical modeling. And now he's stepped up the game and he's able to code. Oh my goodness, I'm going to blow your mind when I show you what he's done. He's able to code artificial intelligence right into NinjaTrader 8 like it's nobody's business. I really think that we're head and shoulders above our competitors. And I'm going to show you why I say that in just a moment. So he has his master's in computer science. The owner of Rightline Trading is Mark Miller. He has his MBA from Cal State. It turns out that his experience is in robotics and automation. He's also an engineer. He's also a U.S. Army vet. He was a sniper in the U.S. Army. So a little bit about the voice you hear behind your screen. My name's Rory Powers. I reside in South Florida. My passion is not only trading the financial markets, but I love saltwater fishing. What can I tell you? You know, it's crazy to live in South Florida and not love the water. You know, we're in a peninsula here. This is a recent fishing trip with Mark Miller and Sergio down in the Florida Keys. You can see a beautiful grouper and snappers. When the boat gets back to the dock, there's a restaurant that you bring your fish up into, and they cook it right on the spot. I mean, it's the most delicious, freshest fish you can imagine. But I gotta brag, and it's not a fish story, about the best catch. My all-time catch of a lifetime was my beautiful wife, Christelle. Christelle is really is God's gift to me. She's just a woman of strong Christian values, a great wife, even a better mother. And she's really the rock that holds everything together. Behind every man is a good behind every good man is a better woman. And God has blessed us with two amazing kids, a 6-year-old and a 2-year-old. That really are my entire life. My friends tell me, they say, Rory, man, you got more guts than brains. You know, at your age, how are you going to have these 2 young kids now? But listen, it is a true blessing. I wouldn't change it for the world. I'm so blessed. Anyway, let's get on with it. I've got some really exciting new information to show you. The genesis of the AI auto trader. And, you know, this slide happens to be my personal favorite slide, only because I can personally relate to this woman so easily. And I'm going to, if a picture could say 1,000 words, I'm going to cut it short and do it in about 100. Don't worry. This nice professional woman, okay, and you can see she's wearing a business suit, and I assume she's of conservative values even. I don't see any piercings or tattoos, not that anything's wrong with that, but she seems to be very conservative. She's in a business setting. I see the office windows that appears in the background, but she's become unhinged. You see, this is manifested over the course of the last 4 to 6 months. She's watched her trading account dwindle down to nothing. Ever felt that before? Ever witnessed that before? Well, it's come to a boiling point, and she's resorted to the old sledgehammer. She's pulled out the sledgehammer, and she's ready to put it through that trading monitor of hers, because she's absolutely convinced that it must be a conspiracy between the market makers, the broker, the prop firm. She doesn't know who, but it's got to be a rigged game, right? Well, that was the genesis of the AI auto trader. Listen, I have the privilege of answering the phones here at Right Line Trading over the last 12 or 13 years. And I do consider it a privilege. And really, I love talking to traders, because what I've learned from answering the phones is that I'm not alone. Me and this nice woman who've blown out so many accounts, we're not alone. And it's nice to hear other people that have similar struggles. And let me tell you something about traders also. We are perseverers. We are soldiers. We can lose, a fight or two, but we're not going to give up on the battle. And the war will continue until we find a path to profitability. And that's what I love about traders so much. I've always cheered for the underdogs. See, we all experience problems making money with consistency. And when, and I don't use that word, without extra meaning. The reason how we know that consistency is the biggest challenge is that's what prop firms use to not have to pay us out, right? Let's spill the beans. Let's tell it like it is. One of the biggest frustrations is not getting a payout. And one of the ways that prop firms prevent us from getting paid is they put into place these rules that make it just a little more difficult to be consistent or profitable. Their main way of tripping us up is consistency, okay? Because they know that the vast majority of us suffer from what we call emotional errors, over trading, revenge trading, making impulsive decisions. I was right here on Trader's Corner not too long ago, and I was listening to a gentleman by the name of Chris Vermeulen, very, very intelligent guy. How he had done a study as it relates human personality traits and whether or not they lend well to being a good disciplined trader. What he found during the course of his study, that out of the 10 or so core personality traits that we all share as humans, maybe one or two lend well to being a good disciplined trader. Yeah, do you remember my first slide, those professional traders that I showed you? What they have in common is that they're very patient and they're very disciplined. You see, in their mind, they have a trading plan. They have a set of conditions that must be present on their chart prior to them pulling the trigger. Very much like a robot. They're not going to enter a trade until everything on their checklist has been checked off. All of the technicals are lined up, and they've quantified that risk is at its absolute lowest. And that's when they're going to get into the trade. They're not going to make a decision that's based on revenge trading or impulses or emotions or anything of that nature. And that's what makes them successful, right? We bought indicators that just didn't work or lacked a proven trading methodology. But listen, it all leads to the same place. It leads to blowing out our trading accounts. And it has been my team's commitment to bring this to an end. And listen, if you've seen one of my presentations before, you'll see the evolution. And I like to refer to it as the optimization process, how this system is evolving. And we're really taking it to the next level. Check this out. We've narrowed it down to two things that we believe are going to create trading success. Number one, and I'm going to flip the script here. Because we are humans and we make errors, and I'm the biggest culprit. I can tell you I make the biggest bonehead mistakes, and I trade with emotion. I have to sit on my hands half the time. But ideally, because we make these human errors, ideally we need software that can get us in and out automatically, right? No impulsive or emotional decisions. Number two, and this is the most important one, is we have to have the proper tool set, right? Listen, unless you've been living under a rock, we happen to be right in the middle of an AI revolution, the likes of which people kind of relate to the invention of the automobile or the wheel. It's that big. And in fact, artificial intelligence now has worked its way into just about every sector of our economy: entertainment and media, energy, agriculture, education, transportation and logistics, manufacturing, retail and e-commerce. Did you know that 95% of large institutions, those are hedge funds and investment firms, are trading with AI algos? Okay, that's not by accident. It's giving them an edge. They're not in front of their mouse clicking a mouse. They're using high-powered artificial intelligence that can look at a massive amount of data, process it, and give them the answers in milliseconds as to which way the market is going to go. Okay, just to give you an idea of the API that we're putting together. We're putting together an API. This is our right line trading agent, and this is where we're headed. During this presentation, I'm going to tell you about the 3 or 4 ways that we're currently leveraging artificial intelligence. I'm also going to tell you where we're going with this in the next week or two. We're getting ready to release an update to this system that is going to be so powerful, none of our competitors is going to have this type of technology. So what you're looking at here is the API that works with ChatGPT and will automatically process market sentiment. They know the news reports drive the market. We're going to have connectors to the Forex Factory and other outside news, economic news reports that come out. And we're going to be able to, number one, during a high impact report, we're not going to trade until the market settles down, but we're going to know instantly what the market sentiment was. Was the report a beat or a miss, right? Which way is sentiment moving the market? It's going to take all of those considerations into placing your trade. It's going to look at your historical trade data. It's going to look at a number of different news reports, performance metrics, strategies, models, and it's going to provide you with a significant edge when trading this financial market. So stick around. The benefits from using the AI Auto Trader is there's no more overthinking or hesitating on a perfect trade. This system is going to put your stop and your profit target in the most ideal locations, which is based on the technicals, really. It's based on the average true range of the market. The way our technology currently works, without going too deep into the minutia, is each one of our bots runs in tandem with what we call a drone. So you have a bot and a drone for each one of our strategies. The drone is really just another bot that's working together with the bot. The difference between the bot and the drone is the drone is going to run 23 hours a day. It's going to trade the Asian session, the London session, and the New York Stock Exchange. And it's going to share a database with your bot. And it's going to tell the bot what the average true range of the market is so it can place your stop in the most ideal locations. It's also going to tell the bot what time of the day is it consistently profitable. If it gets, if it does extremely well, say the first couple of hours of the London Open and a few hours during the New York Stock Exchange every day, then it's going to have the bot trade only during those specific trading hours. Okay. It also has a candlestick pattern recognition component. Our machine learning algorithm will learn certain geometrical and symmetrical candlestick patterns that reoccur again and again on the charts throughout the day, and it's going to take action. For example, we're in a long trade, and all of a sudden we get this big, ugly, bearish engulfing candle. Well, what the system is going to do, it's going to immediately take you out of the trade and either cut your loser short, or it's going to preserve your profits that you've gained on the trade. So there's no more mismanaging trades or over trading. And for the prop traders, we have customized templates that are not only going to trade your evaluation accounts, but we also have custom templates for our PA accounts. So I'm going to go through very quickly what the difference between those two are. So I like to just open the strategy itself up so I could show you the different examples. So let me disable one of them and open it up and bring it over. The easiest way for me to explain this is to show it to you. So the way that we're currently leveraging artificial intelligence is with the drone and the bot are running in tandem, and they're sharing a database. The bot is only going to trade during the trading session hours that it's consistently profitable. There's times of the day that the market just moves better than other times. And those are the times of the day that we're going to focus on. For prop traders, we have built right into our strategy what our what our risk tolerance is. If we have a small prop account, maybe we only want to risk $250 a day. Once it reaches $250, it's going to stop trading. And maybe we put a profit goal at say 500. We make it 2-to-1. So once you hit the $500 profit goal, the system will immediately stop trading. It's going to learn what days of the week trade the best. There's certain times that it's only going to go long or only going to go short based on that market sentiment that it's going to pick up. And the system also has 4 different triggers to get into a trade. With this system, it's going to learn which trigger performs the best in each market environment. So it's going to pick the trigger that historically performs the best in the current trading environment. These bots have become extremely intelligent, okay? What we've learned really over the course of the last dozen or 14 years is our mandate as software developers of, strategy of developing these automated strategies isn't necessarily to get you into every winning trade. More importantly, we want to sidestep the losing trades. That's really where it's the rubber hits the road. I mean, what we found was with futures traders, one of our biggest setbacks is our risk to reward ratio. Sure, picking the right trigger is very important, but how we manage the trade once we get into the trade is just as important as the trigger. And what we've done is we've taken trade management to a whole new level with this, where we're risking, and I'm going to show you a 1-minute video of a trade. We're risking just one contract, okay? But we can go for a very ambitious profit target. In fact, we can go for a home run on every trade with the way that we're able to manage these trades. What I mean by that is this. We call it our leapfrog integration. What is leapfrog? Well, I'll tell you what it is. In this example, and I'm going to show you a video of a trade. In this example that I'm going to bring up in just a moment, the stop is at 60 ticks. So we're risking $300 if we're trading the NASDAQ with the potential to make 100 ticks or $500, a pretty reasonable risk to reward, okay? But we have something special in this, and it's called our leapfrog. What happens is once price comes within 25 ticks of my profit target or plus 75, it gets into what we refer to as our profit window. What that means is the stop is going to fly up and come 25 ticks behind price, okay? My leapfrog is going to jump my profit target from 100 to 125. So now I have a bracket of my stop and my profit target that are about 50 ticks wide. Price is right in the middle. And as the trade matures, they're both going to leapfrog, if it's a long trade, up into the direction of the trend. It's going to continue to lock in profits without giving it the ability to come back and give back those gains. Okay, we call it our leapfrog. And I'm going to show you right now a video of this leapfrog in action. Check this out. Let me set up the tape. You can see in this video, my stop is down here. Okay, it's at minus 60. The trade has matured and it's almost 25 ticks from my profit target. So what is going to happen when I run the tape, and I'm using a trade copier. I've got my leader account is this power play drone, this leapfrog I haven't integrated into it, and I've got 3 PA accounts that I'm using as my followers. Okay, so let me start the tape. Now you'll see as this trade matures, now I have a bad habit of moving my stop, but watch how this automates now. This is the leapfrog in action. And you'll see how this stop will continue to trail this trade up, and the profit target will leap forward, giving it room for a potential home run on every trade. Now, with an intraday with a trailing threshold of unrealized gains, you know, as prop traders, we have to have a tight stop. We can't give back a lot of profits that are unrealized. This is the perfect tool to trade a prop account. We call it our leapfrog. It doesn't allow you to get a tremendous amount of unrealized gains because your stop is going to keep locking in profits by moving up. And this thing will keep going in this loop for as long as momentum keeps pushing price higher and higher. On this particular trade, I think I made about 750 times 3 on this particular move. And let me tell you something, to have that home run trade or that double or that triple mixed in with those singles, it makes a tremendous difference at the end of the month or the end of the quarter or at the end of the year. Having those winners that you've let progress and let mature and get their full excursion. I heard Gary Donahoo talking about it. He says we got to let our winners run. And what he's talking about is that risk to reward. If we don't let our winners run, those losers are going to wipe out all of our gains. So that's how the leapfrog has really changed the trade management with these strategies. With every trade, you have the ability to hit a home run. Uh-oh. Oh, no. Okay, my slide deck froze up. Bear with me for just a moment. Okay. So let's talk about real quick. Let's just summarize where we've been. The 4 ways that we're currently leveraging artificial intelligence was the candlestick pattern recognition. where the system will recognize certain candlestick patterns and take action based on what is expected to happen next. We have the drone and the bot running in tandem. This shows you the drone running 23 hours a day, doing very well in the morning session, and then getting crushed in the afternoon, and then having a really good closing bell hour. Well, the bot sits on its hands during that time that the drone doesn't do well and just trades when the drone is doing well consistently. And that's one of the ways that we're filtering out a number of our losers. And we're also placing our stop and profit targets, are self-optimizing based on the average true range of the market. Throughout the trading session, the position of your stop and your profit targets are going to change. So where we're headed with this, hopefully next week. Sergio just put it on my machine today. And man, the delivery of this, the way he put it together, I mean, it's just incredible. By scanning the news, social media, earnings reports, historical trade data, ChatGPT is going to complete complex online tasks on your behalf, and it's going to seamlessly switch between reasoning and action. Now, it's going to give you the ability, it's going to come up on your ChatGPT, and it's going to give you its recommendations that are going to be spot on. You're going to be amazed how smart this thing is. And with the click of your mouse giving it the okay, it's going to instantly put its trading plan into action on your Ninja Trader. I kid you not. This is all connected through your Ninja Trader. All of these outside sources and connectors is all going to be connected to Ninja Trader. That's what that API is that I showed you earlier. It's connecting all of these outside sources, your database of historical trades, and ChatGPT and the Gronk, and it's going to complete complex online tasks on your behalf. It's going to be scanning the news, gauging sentiment, looking at a tremendous amount of data, and it's going to act using context-aware logic. So this is going to be, just an amazing system, the likes of which we've never seen before. And we're really just scratching the surface of the full capabilities of what these bots can do. Listen, let's just talk real quick about the elephant in the room. The elephant in the room, and let's put it out there. In the past, bots go stale. They don't work in the long run, right? Well, why do bots not work in the long run? They don't work in the long run because market conditions change. When you get them, the settings might be optimized and they might work for a week or two. And you might say, wow, I've got something here, only to find out within a few weeks or a few months that it went stale on you, that it's no longer optimized. This is a game changer. This new technology will self-optimize based on, the market sentiment, the news reports that are coming out. It's going to be able to decide based on these outside connections and a tremendous amount of data that it can process, when to trade, which instrument to trade, which direction to get into, where to place your stop and profit target, and which trigger we should take. That's how smart this thing is getting now, okay? So when I brought over and I showed you this outside agent that's going to integrate into your Ninja Trader along with ChatGPT, this thing is going to be more powerful than anything that you've ever seen before, and we're really excited to release it to our members next week. So let's just talk about, I think when it comes to automated strategies, what it really boils down to is what do the numbers look like? How much money does it make? We've had the luxury of not only having just one bot that does well, but we have several. We have a very diversified portfolio of strategies. We focus on the index equities, the NASDAQ, the S&P 500, and the Dow. We've diversified into crude oil and gold, and that's not by accident. Listen, when these news reports come out, large institutions, hedge funds, when Jerome Powell comes out and there's bad news, a safe haven is to put, large institutions will take risk off and they'll put their money in gold, and gold becomes very volatile. Or there's some political unrest in the Middle East. Crude oil, we've seen it just when, Israel and Iran were having a fight. Crude became very volatile. So to have those in our toolbox, crude oil and gold may not be our most consistent bots, but they're in the toolbox because when those opportunities arise, we will be able to capitalize on them, okay? So we have very liquid instruments. One of our best bots has been around for the longest is a 2-minute data series that runs on the NASDAQ called the Retirement Plan. This bot does not get caught up in the whipsaw. A 2-minute bar is a pretty good sized bar for the NASDAQ. From July 15th to August 15th, after commissions, this bot made $8,146. It's important to know that that's not a back test. That's not in my strategy analyzer. These were trades taken in a live trading environment. Okay, it's not a back test. Sometimes I see webinars and I see them show a strategy analyzer, which is not very reliable, to say the least. We have a very exciting bot that runs on an 8 Unirenko. And in times when the market is volatile and there's big swings up and down and good movement, this thing set the daily record. It's an 8 Unirenko. It's called the Steven drone. And from June 1st to August 4th, it was up over $13,500, trading just one contract. We have the NASDAQ on 150 range. Another one that's really good in volatile environments. It does not get caught in that whipsaw. These markets have a tendency to go sideways and give us that stair step with slow movement to the upside that if you have a tight stop, it's going to get you. This 150 range gives the market some room. We could trade it on the minis or the micros. All of our templates come in both minis and micros, okay? This 150 range was up $14,833, trading just one contract between April 28th and August 4th. Now let's talk very briefly, and I'm gonna get to my special offer about the PA and prop firm accounts. For the evaluation accounts, we have customized templates. I like to refer to these bots as prop trading on steroids because, man, these things are just so powerful. And you throw in a trade copier in the mix. I saw Adrian's presentation earlier. I was so intrigued by his trade copier. It's a platformless trade copier. Incredible. But anyway, I like to refer to this as prop trading on steroids because with those trade copiers, you could put 4 or 5 accounts. Mark Miller, the owner, I've seen him do 10 and 20 accounts at once on a trade copier and trade these one-day passes. The way the one-day pass works is it will the one-day pass is specifically to pass an evaluation. It trades the maximum number of contracts to go the minimum number of ticks in order to hit your profit goal. Okay. So for example, on the NASDAQ, for a $50,000 account, we could trade 10 contracts if we're trading an Apex account. Our profit goal to pass the evaluation, we need $3,000 in profits. So 10 contracts, if we go 60 ticks, that's 3,000 on the NASDAQ. Well, now we have to kind of factor in slippage and commissions. So we'll give it 3 or 4 extra ticks. So we'll go for 63. or 64 ticks. And we'll let the bot, during the time of the day that historically it does the best, and the market's moving really nicely, we'll take our strongest bots and we'll let them trade these one-day passes. Today, a couple of my bots, the ES on the 30 range, hit the one-day pass twice. It was up almost $6,000. The NQ 2-minute one-day pass was up 2,900, and it hit the one-day pass on the 2-minute NASDAQ. So those one-day pass templates will be included in our special offer today. Normally it's an add-on. Statistically, a very common question is, what are my chances of winning on the one-day pass? Remember, I answer the phones here. I'm not going to overpromise and underdeliver. I like to do exactly the opposite. Okay, when you call me, I want you to be happy with me. And listen, that's accountability. That's accountability, and I want to be accountable to you. So when you call me on the phone and I answer, I like to say, listen, if you buy 3 of them, statistically, you're going to get a funded account on 1, because I know 1 out of 3 is doable. In fact, it's even a little better than that. Okay. In my example on my slide, we had one that was 70%, but that's an outlier. Out of 3, you're going to get 1. Now, remember, this is trading. You could take 3 losers in a row. You could take 3 winners in a row. That's just the way it works. You know that. But statistically, it's going to be 1 out of 3. You're going to get turn an eval into a PA account. I saw Apex just did their Labor Day special. They're 90%. In fact, Right Line Funding, our prop firm, we have a special for $29, which I think is about the same as Apex's. So ours is $29. Apex, you get 90% off. So listen, if for 90% off or $29, you buy 3 or 4 accounts, you're going to get a funded account out of one of them, at least, statistically. And that is your vehicle. That is your vessel, without risking your own capital, to start extracting some payouts out of this market. Once we get to those PA accounts, we have a much more consistent strategy that we use. We have our 30 range leapfrog. It's called our power play. We have a few different ones that we can use that are far more conservative. One of them is running on the E-mini. We have the ES scalper. We have the NASDAQ power play. We have a few nice strategies that will, with very little risk, look to make $250 to $500 per day and stop trading. In fact, since January, about January 15th to today, I've been trading 3 PA accounts on YouTube that are up over $30,000 since January. And this is all done live on YouTube. And that was all with the Power Play bot. And these bots, these prop account bots, are included in the special offer. One of the most common questions is, can I get a payout? Well, the answer is, of course you can get a payout. We'd be wasting our time if not. Jim said that PropShop allows bots. I know Right Line Funding allows bots. I know Apex allows bots because we're all getting payouts. Not only is our team, myself, Mark Miller, but many of our members are all getting payouts using these bots. The reason being, and Jim touched on it, and I'd just like to just go over it one last time. This is not considered a black box system or a high volume trading system that's going to every 5 or 10 seconds be in and out of the market. This is a strategy, they call it a semi-automated strategy, because we control all of the conditions of the entry. They're all adjustable parameters within our strategy. Once the trade is triggered, we have our profit target and our stop loss in place right on the chart. So if we wanted to, we can certainly start sliding our stop and our profit target as we see fit, or we can set it and forget it. And we could just let the thing do its deed. When I start moving things, I usually get in its way. It does a great job managing these trades by itself. But that's why we're able to get payouts for those two reasons. Our members, if you decide to come aboard, we have a beautiful Discord chat. And I know it's been a long event. If I don't get to your question, please put your name and your number in the chat box, because I want to leave a couple of minutes at the end. I'm going to let Anthony draw a couple of names. And Anthony, if you want to take a screenshot of the attendees and put them in ChatGPT, or I can do it, and we'll just pick two names at random, and I'll send them. I'll let you know when to do it. I'm coming up to the end. But before we get to the drawing, it's important to know that it's not just me having success. I really get more satisfaction seeing our members succeed, getting to know you guys over the last 10 or 12 years and sharing in your struggles. As traders, we all have pitfalls and speed bumps and setbacks. Knowing what those are with people and then seeing you succeed and overcome those. I always say, the taste of victory, is so much sweeter when you know defeat, when you've been down and out, and all of a sudden you come back and you succeed. Oh man, there's just no better feeling than that. So I really get a better. I really love to see our members do well. Judy is one of them. She does extremely well. She's in retirement. She uses this AI auto trader to supplement her income. And she sends us pictures from all around the world. And she takes her portable trading her trading platform with her. This was on an MSC cruise out in the Mediterranean. She was off the coast of Italy, and she was joining us in YouTube. She sent us this screenshot. And the next week she was in Dubai, and she sent us this video. This was from their balcony on Dubai. She stayed there for a month. And then next she went to Vietnam. And she's traveling the world. She's getting payouts. And she's doing it leveraging this automated AI auto trader. I always get questions from people overseas. Hey, I'm in the UK. I'm in Singapore. I'm in Australia. Can I trade this system? The answer is a resounding yes. We've actually hard-coded it specifically to be able to trade in any country of the world. So you will be able to trade this. Simon is across the pond in the UK. He made 16,000 across 5 different Apex accounts one day. Over 7 accounts, 16,000 over 7 accounts. Limit up. These are some of the members that are doing well. Steve was crushing it. One of our longtime members, Ron N., Vietnam veteran. Yeah, that's right, Vietnam. Made it back and put 10,000 in the bank on gold. When Trump came out with those tariffs and there was that big sell-off, we had that gold bot in our sleeve, and it paid off for Ron N. Suzanne is a leader of our community. She uses these bots with Take Profit. So let's get to the special offer. The special offer today, and this is our Labor Day special. Can you believe we're already at Labor Day? It's unbelievable. This is like the time of the year that, it's really exciting because the summer months are usually rugged, and they have been. It's been, I've, been break even at best throughout this summer, and I'm not too proud to be honest with you. But I really look forward to the post-Labor Day market. Labor Day to Christmas, all the big shots are back from the Hamptons and back from their vacations, and the market starts moving again. The FOMC, we're looking forward to some interest rate cuts coming up. You know, that's what it sounded like the last I heard from Jerome Powell. And listen, you know, the market's at all-time highs. So I really think with this new technology that we're getting ready to release this coming week and the market conditions post Labor Day, I think we're in for a really nice ride for September through the end of the year, December. And I'm really looking forward to it. So the special offer, this is the last opportunity at this pricing. The monthly membership is 50% off. We have 3 different sizes. It's important to know that this is the full Monty. Okay, this is going to include everything. The new updates that are coming out. It's going to include the discretionary component. What I mean by that is you get chart templates for each one of the strategies. It has our automated component. That's all of the strategy templates are going to be included. And it also has all of our prop trading templates. Those will be included as well. My associate Brock is going to put the link into the chat box. I see your question. I'll answer it in just a moment. So let me get to the pricing. The monthly membership, you know, it includes everything. Just $2.99 a month now through Labor Day. This special offer expires Monday. Instead of $5.98, it's going to be $2.99 a month. $2.99 a month is the lowest price we've ever offered this system for. Okay, we want to get you in because we know once you give this thing a try, you're going to want to go for the all-in deal. There's no way around it. This thing is a powerhouse. The annual membership, instead of $29.98, it's a much better value. For the month, it comes out to about $3,600 a year. With the annual, that's cut in half. Now you're at $19.99 for the entire year. You'll get all future updates. You'll join us every morning on YouTube. You'll be part of our Discord community. And we do live training every week in our Discord. Now, the best value, if you have the means, is going to be the one-time payment. That gives you lifetime access to the full system and all future updates for just $29.99. $29.99. I see at the corner of my eye, PayPal later. I love PayPal later. Pay later. It's interest-free if you qualify for up to 6 monthly payments, anywhere from 4 to 6 payments, completely interest-free. So it's not such a hard pill to swallow. One of the questions is this only for Ninja? Tony, yes. This system runs on Ninja Trader. Okay, you can have any broker that supports Ninja. Interactive Brokers, Ninja Trader Brokerage. If you want to use a prop firm, there's a number of different prop firms that support Ninja Trader. So to answer your question, yes, it runs on Ninja Trader. You need 2 things to run this system, Ninja Trader 8 and a live data feed. You have those 2 things, you're in business. Okay. Last question is regarding micros. Yes. You can trade all of these bots, you could trade using micros. Okay, if I didn't get to your question, please put your name and your number in that chat box, and I will give you a call after I get a chance to get a drink of water. Oh, wait, there's more. Let me see. Yes, John. John says, so you are saying that the drone is the optimizer for the bot. It does use the drone, yes. It uses a couple of other things that we're going to be releasing through the ChatGPT as well. But the drone is what's optimizing the bot. The 2 are sharing a database. The drone is seeing what the maximum favorable excursion is, what the maximum adverse excursion is. It's telling the bot where exactly, mathematically, and let me tell you, this is complex calculations. Try to do it. It's almost impossible. instantly it'll put the stop and profit target in the perfect place based on the average true range. That's the benefit of artificial intelligence. Absolutely, Ted. Ted asked, can we trade it overnight? Thank you, Brad. Brad said the leapfrog looks fantastic. Let me tell you, Brad, it is a favorite. We just released it about 30 days ago, and our members love it. I mean, it's they're so happy with that leapfrog. So am I, because that's what kills us as futures traders. Not allowing our winners to run. This gives you, that trailing stop and the runner with the jumping profit target. Okay. Yes, absolutely, Sherry. We do get payouts with this system. Thank you, Yolanda. Will you please put your name and your phone number in? I can send you an email, but if you'd like, I could try to answer your questions on the phone. George, you're a member, so you please put your name and number in the chat. You've been with our community for a long time. If you put your name and your number, I'll do something special. David, if you put your name and your number in the chat box, I'll be happy to give you a call. Hey, Mark, good to see you. I sure will, Robert. Okay, Tejas. Okay, Dave. All right. Well, that's I don't see many more questions than that, but there's a lot of phone numbers, and I will give everybody a call who left their number. Anthony, do you want to do the drawing, or would you prefer that I do it?
Able to do it?
I'm sorry?
Would you be able to do it?
Yeah, sure, I could do it.
Okay, thank you.
I want to get a screenshot. Wow. That's there's a lot of people in here today. Great crowd. Thank you, everybody, for participating today. Labor Day weekend. I hope everybody's able to spend some quality time with those that you care about the best. And I want to end with that message. Listen, if your prop trading journey or your trading journey has been filled with speed bumps, potholes, disappointments, I truly believe that I come with a viable solution, a viable path to profitability. Take me up on my offer. Let us prove it to you. This AI auto trader is really going to be the most powerful automated system available to the retail trader. And our members who are already on board are going to get this as a free update. That's what we do for our members. Let me just get a quick screenshot. Okay, Mr. Robert Pettyjohn. Robert P. You're number one. And Bob R. Bob R. I'm going to send you both. Let me write this down. R and okay, excellent. All right, so I just want to just say thank you everybody for your time. I hope you have a great weekend. Anthony, thank you so much for having me today on Traders Corner. It's always a pleasure. Have a blessed weekend, everybody. Enjoy your Labor Day.
Thank you, Rory. That was a powerful finish. Thank you for showing us what's next. That brings us to the end of today's Prop Trader special event. Thank you all to all of our amazing speakers, and a huge thank you to you, our live audience. Be sure to revisit the chat and grab any special offers you may have missed. And if you haven't entered the drawing yet, well, maybe we'll do another one. I'm not sure. But thank you for participating if you did. We hope you leave today with tools, confidence, and clarity to pass profit and prosper in your prop trading journey. Until next time, this is Anthony Chapman with Traders Corner signing off. Thank you so much and have a profitable week, month, and year. Thank you so much. Bye.